Good morning, everyone. Is my voice audible, pa? Yes. Low arc. Now? Okay. So whether you did that questions on valuation, value of supply. Any question you want me to discuss? Any question you want me to discuss, or you understood the answers for all the questions? Everyone? Okay. So then we will move on to the next chapter or the next segment, segment 6, input tax credit. So please take page number 77. Page number 77, input tax credit. So which is a very important chapter. And so question number 1, that is a consolidated question, will always be on this input tax credit, and even other places also input tax credit related provisions will be referred. So this input tax credit, there is one new section that has been added, section 41. Section 41 talks about computation of ITC to be availed in GSTR 3B. What does this section 41 says? That whenever supplier files GSTR 1, GSTR 1 is a return to be filed by supplier containing the details of outward supplies. GSTR 1 is what? A return containing the details of outward supplies. And based on GSTR 1 of the supplier, whatever outward supplies that are reported by supplier in GSTR 1 will be made available to recipient in one statement. What is that statement? GSTR 2B. Already I gave you the discussion related to that. So supplier will be filing GSTR 1. Based on the GSTR 1 of the supplier, the data will be reflected to GSTR 2B of the recipient. So based on GSTR 2B of the recipient, so he can take ITC in 3B. Okay. Now here there is one doubt. Many people are having this doubt, that is, if GSTR 1 has been filed, whether they will pay tax at the time of filing GSTR 1? No, they will not pay tax at the time of filing GSTR 1. GSTR 1 is mere document which contains the details of outward supplies, but we will not pay any tax at the time of filing GSTR 1. But when we will pay tax? At the time of filing GSTR 3B. Now you are my recipient, I am your supplier. I filed GSTR 1, but I have not filed GSTR 3B. I just filed only GSTR 1. I have not filed GSTR 3B. So whether this data will be reflected in your 2B or not? Yes, it will be reflected in your 2B. So because 2B is not based on supplier's 3B. 2B of the recipient is based on GSTR 1 of the supplier. So supplier, whenever he files GSTR 1, immediately that ITC will be reflected in GSTR 2B and it will be availed. Now supplier did not file GSTR 3B, means what? Tax paid, tax not paid, not paid, but reported in GSTR 1, but the tax is not paid. So GSTR 3B not filed by me, which means I reported the liability in GSTR 1. So therefore that got reflected in your GSTR 2B, you availed it as ITC, but I have not yet paid the tax. Now in this case, you should reverse the ITC what you have availed. Why? Because one of the condition for availment of ITC is that supplier should have paid the tax on that supply. Then only recipient can take ITC. There are conditions for availment of ITC, section 16. In that conditions for availment of ITC, one of the condition is that supplier should pay the tax. So therefore, only when I pay tax you will take credit, or whether I pay tax or not you will take credit? No, whether I pay tax or not you will take credit. Okay, but if I am not paying tax you will reverse the credit. Is it clear or not? What is the time limit within which I need to file GSTR 3B? So there is a prescribed time limit. By that time if I file, you don't have to reverse the ITC. Is it clear or not? If I am not filing the GSTR 3B by the prescribed time limit, then you need to reverse the ITC. Clear? Now, what is that prescribed time limit by which I need to file GSTR 3B? This point is not applicable for May 23 exam. Which point? Time limit by which the GSTR 3B needs to be filed is not applicable for May 23 exam, but it is applicable for November 23 exam. But nothing wrong in knowing it, just one point only, that is, by September of the next financial year, I need to file 3B. For this financial year, I need to file GSTR 3B by when, pa? September of the next financial year. Then, you don't have to reverse the ITC. But if I am not filing 3B by September of the next financial year, then whatever ITC availed based on your GSTR 2B needs to be reversed along with interest. Along with interest. Again I am repeating, carefully listen. Supplier will be filing GSTR 1, step number 1. Okay, supplier will be filing GSTR 1. Based on that, what recipient will do? It will be reflected in GSTR 2B of the recipient. So recipient will take the credit based on 2B. Done. Understood this step number 1? Supplier will file. Based on that, it will be reflected in of recipient, and recipient will take ITC based on GSTR 2B. Done. Understood this? Now, supplier has to file GSTR 3B within the prescribed time limit. Suppose if not filed within the prescribed time limit, what recipient should do? Reverse the ITC so avail along with interest. Understood? So this much you remember, that is sufficient. Now, so which means you will take ITC only when supplier files 3B or supplier pays tax, or whether supplier paid tax or not, we will avail ITC. Whether supplier paid tax or not, we will avail ITC. But the supplier has to pay tax at a later point of time by filing 3B. You understood? Now, how much ITC that we avail in 3B? Whatever ITC that is reflected in 2B, that is called as matched ITC. Whatever ITC that is reflected in 2B is called as matched ITC. And will that differ between your books of accounts? Will that differ between your books of accounts and 2B? Yes. That already I told you in the first class itself. Supplier did not file GSTR 1, but he gave an invoice to us. Because of that reason, it will be reflected in our books, but it will not come in GSTR 2B. Do you remember that? So I told you A, B, C, A filed GSTR 1 properly, B did not file GSTR 1, C filed GSTR 1 but with wrong information. So we will take ITC based on the invoices, but actually in GSTR 2B only based on supplier's GSTR 1 it will be coming. So therefore, will there be mismatch between GSTR 2B ITC and the real ITC? Yes. But which one only we should take? Only as per 2B. In this 2B also you need to make some adjustments. Directly whatever is reflected in 2B we cannot take as credit. As per section 41, self-assessed credit should be taken. What is that self-assessed credit? Whatever is reflected in 2B minus blocked credits. There are some purchases which are considered as blocked credits, which means you should not take ITC with respect to that. But that will also be there in GSTR 2B, because the portal don't know whether it is a blocked credit or not to you. So due to that reason, so GSTR 2B contains some inward supply data which is actually blocked credit for us. So even though it is matched ITC, can we take that credit? No. So we should eliminate. Is it clear? So that is the first thing, minus blocked ITC. Minus, you have some purchases which is used for your outward supply which is exempted. You are purchasing something and used for exempted outward supply. Can you take ITC with respect to that? No. Because if you remember this point also I stressed long back, if your outward supply is exempted, you cannot take ITC on your inward supply. So therefore, when my inward supplies are used for exempted outward supply, this data also will be reflected in GSTR 2B, but I should not take this credit. So therefore that is also eliminated. ITC with respect to exempted supplies. Are you looking into this? So first, what is the base? What is the base to be taken? ITC reflected in 2B. ITC reflected in 2B. 2B of recipient. Who will take ITC? Recipient only will take ITC. So ITC reflected in 2B minus blocked ITC which is there in 2B. So we should take out minus inward supplies which are used for exempted outward supplies minus you have made some purchases which is used for not used for business purpose, means used for personal purpose. Means can you take ITC with respect to that? No, because section 16 conditions for availment of ITC says that only if the inward supplies are used or intended to be used in the course or furtherance of business, we can take ITC. Only inward supplies which are used or intended to be used in the course or furtherance of business, we can take ITC. Means we are making some purchases which is not used for business purpose, we cannot take ITC. For example, I purchase a laptop and that laptop I am not using for taking classes, but that laptop I am using at my home for my children to attend some online classes, etc. Can I take ITC with respect to that? No, because inward supply used for what purpose? Non-business purpose. But portal don't know whether it is for business purpose or non-business purpose. So therefore this data also will come in GSTR 2B. The moment I buy laptop, I will be giving my GSTIN. So therefore that input tax credit will be coming in 2B. But I should not take credit. So therefore what are the three exclusions from the ITC as per 2B? Come on. Blocked credit, inward supply used for exempted, and inward supplies which are used for non-business purpose should be taken out. Now, one we need to add, that is GST paid under RCM. When I am making some inward supplies on which I need to pay GST under RCM, sir, CG, got, salads, in that whatever GST I paid under RCM, will not be reflected in my 2B because my supplier is not paying, I am paying. So means it will not come in 2B. Even then we can take ITC with respect to that. So that is the only exception. What is the only exception to matched credits? General rule matched credit only can be taken. But only one exception we have. Even though it is not coming in 2B, we can take. What is that? GST paid under RCM. GST paid under RCM, whether we will take it as credit in the same month or next month. Same month. So this month we are paying tax under RCM. This month itself we can take it as ITC. So therefore, now you get finally one number that is called as ITC availed in GSTR 3B. So can you tell me what is ITC availed in GSTR 3B? Come on. ITC reflected in GSTR 2B minus blocked credit minus inward supply used for exempted outward supply minus inward supply used for non-business purpose plus GST paid under RCM. So that is called as ITC availed in GSTR 3B. Done? Now, what is the procedure for availment of ITC in 3B? Say this. First, Mr. A, B, C and D are the suppliers from whom ABC and Company, a trader, has made a purchase. ABC and Company, a trader, has made purchase from ABCD. A filed GSTR1. ABCD raised invoices to ABC and Company. So what is the invoice value? 1 lakh plus 12,000, 50,000 plus 9,000, 1 lakh 50 plus 27,000 and 2 lakhs plus 10,000. Now as per invoices, how much is the GST paid? Please calculate and tell me total. What is the GST paid on invoices? 12,000 plus 9,000 plus 27,000 plus 10,000. 58,000. So therefore ITC reflected in our books is 58,000. But can we take this 58,000 as ITC in 3B? No. So we need to check what is the ITC reflected in 2B. So that ITC reflected in 2B is based on GSTR1 of the supplier. A is filing GSTR1 with 1 lakh plus 12,000 and B has not filed GSTR1. So he missed filing GSTR1 by the due date. Then C filed GSTR1 1 lakh 50 plus 18,000, wrong GST he mentioned. Then D filed GSTR1 2 lakh plus 10,000. So now based on GSTR1, what is the tax paid by the suppliers? 40,000, which means in 2B, how much will be reflected? Only 40,000. So therefore, how much can be availed as ITC? Is it 58,000 or 40,000? Only 40,000 can be availed as ITC. And what is the unmatched ITC? 18,000. What is that 18,000? Nothing but GSTR1 not filed by Mr. B and Mr. C reported lesser GST to the extent of 9,000. That 9,000 and 9,000 only 18,000, which is not reflected in 2B, therefore that cannot be taken. So therefore, what is ITC that can be taken in 3B? 40,000. So first ITC in books is 58, but ITC in 2B is only 40,000. And when this 40,000, we will be getting to know when 2B will be made available to us. So after 13th, actually this transaction is pertaining to July. So for July, it is 13th August it will be generated. 13th August midnight, the GSTR 2B will be generated. Is it clear? So after 13th August means on 14th August, 15th August, you can check the GSTR 2B. So that will contain, which means if B has filed the return by the due date, it will be reflected in the 2B. If B has not filed the return by due date, GSTR1 by due date, it will not be reflected. Now what B is doing? B is filing it late. B is filing it late. Now will it be coming in 2B of July month? No. But when B is filing, you see, next page you see, Mr. B filed GSTR1 of July on 31st August, which means, so it will be reflected in GSTR 2B of July or GSTR 2B of August? August. So it will be reflected in GSTR 2B of August. So therefore, this trader can take ITC when? August. So for August month, he can take ITC. So ITC reflected in 2B of August pertaining to July 9,000. ITC availed in 3B of August pertaining to July 9,000. So therefore, July month, he cannot take ITC of 9,000. So that 9,000 he can take as ITC whenever it gets reflected in 2B. When it is reflected in 2B, August. For August month, they will be filing on 3B na. When they will be filing for August month 3B? So September, 20th of September, they will be filing. In that they can take ITC. Okay, but which month? For which month we need to know. When they are filing, when they are taking later, but for which month they are taking. For July month, can they take ITC? No. For August month only they can take ITC. Is it clear? Fine. Next, what Mr. C did, C rectified his GSTR1. Can the GSTR1 be rectified? Yes. So yesterday only we discussed, there are total 5 time limits. Time limit for availment of ITC, time limit for issuance of credit note, time limit for rectification of GSTR1, time limit for rectification of GSTR3B, and time limit for rectification of GSTR8. So can the GSTR1 be rectified? Yes. So GSTR1 can be rectified. So C has rectified his GSTR1 and reported a further liability of 9,000 rupees. When C is doing this? December 2022. So Mr. C rectified invoice reported in GSTR1 of July in December, which means that extra 9,000 we will be getting in GSTR2B of which month? December month. So therefore, they can take ITC in December, that is they can take ITC for December month. So therefore, ITC availed in 3B of December pertaining to July 9,000. You understood here? So eventually, whenever it is getting matched in future, so then only we can take ITC. So today we can take only matched ITC, but we need to follow up with the supplier and we need to ensure that the supplier is filing GSTR1, supplier is reporting proper details in GSTR1. So in future, whenever it happens, at that time we can take credit. So it does not mean we cannot take credit. So when we see, even though 58,000 but only 40,000 can be taken as credit, it does not mean 18,000 we cannot take credit. 18,000 we can take credit, but when we can take credit? In future, as and when B files the GSTR1 and C rectifies the GSTR1. Understood or not? So in exam, these points and all will be given. They will give ITC reflected in GSTR 2B of this month is this much, and ITC reflected in 2B pertaining to some prior month is this much. So that much amount also we can take as credit. Is it clear? ITC reflected in 2B of July pertaining to July 40,000. ITC reflected in 2B of July pertaining to January 3,000. So the 3,000 we can take as credit. Is it clear? So whenever it gets matched, whenever it gets reflected in 2B, we can take as credit. Then whether taxpayer is eligible to take credit or ITC on all supplies auto drafted in 2B. No. So we have a CBIC FAQ. So they are telling taxpayer would be eligible to avail input tax credit based on ITC indicated in 2B. However, there may be other scenarios for which input tax credit may not be available. What are the other scenarios where input tax credit may not be available? Blocked credit, inward supply used for exempted, non-business, etc. So therefore, taxpayers are advised to self-assess and reverse or take such credit in their 3B. Okay? Now, see this. Illustration 1. ABC Limited receives 100 invoices for inward supply of goods or services involving ITC of 10 lakhs from various suppliers during the month of January 2021 and has to claim ITC in his form GSTR 3B of Jan to be filed by 20th February. So the due date of 3B is 20th of the month following every month. So therefore GSTR 3B of Jan to be filed by 20th February 2021. Suppliers have furnished in form GSTR 1 80 invoices. So even though he got 100 invoices with ITC of 10 lakhs, but ABC Limited supplier has reported only 80 invoices with ITC of 9.7 lakhs on the due date of furnishing details of outward supply. Also GST paid under RCM is 1.5 lakhs. So how much ITC can be availed by ABC Limited in 3B? 9.7 lakhs plus GST paid under RCM 1.5 lakhs. So 9.7 plus 1.5. So total ITC that can be availed is 11.2. What is the ITC which they could not take? Out of 10 lakhs, they took only 9.7 lakhs. That 0.3 lakhs they have not taken as credit. So when they will take credit with respect to that 0.3 lakhs in future, as and when it gets reflected in 2B. Okay. Then, so this is section 41. Now whatever we have discussed so far is section 41, which is an amended section. So this particular section can definitely be tested in May 23 exam for sure. Mark my words. Okay. So this section 41 will be tested. But only thing that you don't have for exam is that what is the time limit by which supplier should file the GSTR 3B. So that is not there, but they have to file it in a prescribed time limit. But you need to remember for exam purpose, if they are not filing within the prescribed time limit, then the recipient has to reverse the ITC along with interest. Then look into the next area, section 49 subsection 5. Section 49, in input tax credit, first we completed section 41, which is amended section. Then the second area is section 49 subsection 5, manner of utilization of credit. So this manner of utilization of credit, so already we discussed this first point, first rule, that is IGST credit, there is no restriction. So we can use IGST credit for payment of any GST liability. Any GST credit can be utilized for payment of IGST liability. Do you remember? While discussing IGST settlement, I told you. What about the other three things? CGST, SGST, UTGST, respective credit can be utilized for payment of respective liability, and cross utilization is not possible. Say this rule 1. There is no restriction with respect to IGST, which means I have IGST credit. Can I set off with any liability? Yes. Same way I have some credits. CGST, SGST, UTGST credit. Can I set off with IGST liability? Yes. There is no restriction. Second, amongst other taxes, what are the other taxes? CGST, SGST and UTGST. Respective credit can be utilized for payment of respective liability and cross utilization. Can CGST credit be used for payment of SGST liability? No. SGST credit for payment of CGST liability? No. Cross utilization not allowed. Then, so rule 2. So this rule 1 only, so I said in a different manner. That is, IGST is like male and CGST is like his wife, SGST, UTGST is like his parents, IGST so can adjust with his wife and his parents, but his parents cannot adjust with his wife. You understood or not? So therefore, IGST credit can be set off with CGST, SGST, whereas SGST cannot be set off with CGST, CGST cannot be set off with SGST. Then rule 2, priority. So what is the priority? IGST credit, what we should do? First we should use it for payment of IGST liability. Then CGST or SGST or UTGST in any manner, any proportion. So there is no hard and fast rule there. That is, when I have IGST credit, first IGST credit I should use for what purpose? IGST liability. Still I have some IGST credit that I can utilize for payment of CGST or SGST or both CGST and SGST in any manner, any proportion. But I need to ensure that the cash outflow is minimized. That is the objective. Okay. For example, see this. There is one illustration given below. So that illustration only I am discussing. Compute the net GST payable from the following data. Gross GST payable on outward supplies 5,000, 5,000 and 5,000. GST paid on inward supplies 2,000, 2,000 and 10,000. Now, what is the gross liability? CGST, then SGST and IGST. SGST and IGST. So what is the gross liability? 5,000, 5,000 and 5,000. Now, first I have to use IGST credit. So that is actually rule 3. Rule 3 says, before utilizing CGST credit and SGST credit, the credit of IGST should be exhausted. That is given in rule 3. So first which credit I should spend? IGST credit. Why I should spend IGST credit? Because we have IGST settlement. So depending upon IGST credit utilized for CGST or SGST, the money will go into central government or state government. Until that point of time, this IGST will be in a suspense. So due to that reason, first we need to spend the IGST credit. Okay. IGST credit, how much we have? 10,000. First we will use it for what purpose? Payment of IGST. So we use the, still how much we have? 5,000. Suppose if I use 5,000 for payment of CGST, I can use. If I am using for payment of CGST, then what is the CGST and SGST credit? CGST and SGST credit. What is the CGST and SGST credit? So 2,000, but 2,000 I don't have to use here. Why? Because already liability became 0. And SGST I will use. Can I use CGST credit for payment of SGST liability? No. So therefore, I will have 0, 3,000 and 0. So this is my liability. And what is the excess ITC carried forward? Which credit? CGST 2,000. Now this is utter nonsense. When I am paying 3,000 and carry forwarding 2,000, it is of no use, correct? Actually what I should do, I should use this 2,000 also for payment of 3,000, because what is the correct answer? The correct answer is the total of gross liability minus total of ITC should be the correct answer, correct? What is the total liability? Total liability 15,000. Total ITC, so 15 minus 14, so 1,000 is the correct answer. Is it clear? So I should get 1,000 rupees. Then only the cash outflow is minimized. So therefore, this is not the correct way of utilization. Then what I should do? I should ensure that I am not using IGST fully for payment of CGST or SGST. So then what I should do? Use IGST credit for CGST, SGST. So in equal ratio in the liability. So liability is in what ratio? 5,000 and 5,000. So you use 2,500, 2,500, or you use any amount not more than 3,000 because there is 2,000 rupees CGST credit. Ayya, please see. 2,000 rupees CGST credit is there, pa. Then how much we need to distribute to CGST? 3,000, not more than 3,000. Why not more than 3,000? Because already 2,000 credit is there. Same way, how much we need to distribute to SGST? Not more than 3,000. Okay. So that's why we are distributing 2,500, 2,500. Now, let's see what happens in this case. So CGST, SGST, IGST. So gross liability is 5,000, 5,000 and 5,000 minus IGST credit utilized. IGST credit utilized 5,000 for payment of IGST. Then 2,500 for payment of CGST, 2,500 for payment of SGST. Thereafter, CGST credit and SGST credit. CGST credit and SGST credit. How much? 2,000 and 2,000. So therefore, the net liability will be 500 and 500 will be the net liability. 500, 500 and 0. So the total is equal to 1,000. Therefore, this is the correct answer. Is this the only alternative? No. We have alternative answers also. How? Say for example, I am utilizing 3,000 for payment of CGST and 2,000 for payment of SGST. Then what happens to my net liability? 0 and 1,000. This is also correct answer because the total should be equals to 1,000. The total should be equals to 1,000. Sir, how do we know this 1,000 is the answer? That's what I gave you the shortcut. What is that? Total of liability minus total of ITC should be equals to some number. That is the correct answer. If you are getting that as the answer, your answer is correct. Is it clear? Total of liability minus total of ITC should be equals to 1,000. Now you do anything, but here what should be your net liability? 1,000. Now in exam, I request you to add one more column, that is total column. Okay, total column. Therefore, even if here there are any differences in number, in the total you will know whether your answer is correct or not. Understood? So therefore, total 15,000. 15,000 minus, so 10,000 minus 4,000. So therefore, it will be 1,000. Okay. So here if you get 500, 500 also, the total will be 1,000. Suppose if the suggested answer is 1,000 as the answer, but you got 500, 500. Actually correct only. Your answer is also correct. But that valuer, because he is a sadist, he may not give the marks. So that's the reason why when you put a total column, in the total the 1,000 is there. So we will get the full marks. Okay. Even for us also cross verification will be easy. So now apart from making 3 columns, CGST, SGST, IGST, one more extra column also you put, that is total. Understood? Now, so what is the first rule that we have studied? There is no restriction with respect to IGST, which means IGST credit can be utilized for payment of any GST liability and any GST credit can be utilized for payment of IGST liability. Between CGST, SGST, UT, GST, respective credit should be utilized for payment of respective liability. Then second rule, priority. IGST credit should be first utilized for payment of IGST liability. Thereafter, between CGST, SGST or UT, GST in any manner, any proportion. Then CGST credit, SGST credit, UT, GST credit. First for what liability? Its liability. Its liability. That is CGST credit for CGST payable, SGST credit for SGST payable, UT, GST credit for UT, GST payable. Thereafter, if you have any balance, use it for payment of IGST. First, we will use it for its liability. Thereafter, if excess balance is there, we are using it for other liability. Is it clear? Then third rule, Third rule says, before utilizing CGST and SGST credit, the credit of IGST should be completely exhausted, which means first you should spend which credit? IGST credit. Only when it becomes zero, then you need to touch CGST and SGST credit. Then rule 4. Rule 4 is, I have multiple credits, CGST, SGST, UTGST, like that, multiple credits I have, but only one liability, that is IGST liability. For payment of IGST liability, always which credit should be used first? IGST credit. Thereafter, CGST credit. Thereafter, SGST or UTGST credit. What is the difference between rule 4 and rule 2, this first point? In rule 2, we have single credit, IGST credit, and multiple liabilities. So first IGST credit used for IGST liability, thereafter between CGST, SGST, UTGST in any manner, any proportion. But rule 4 is, I have lot of credits, but only one liability, that is IGST. So first IGST credit, second CGST credit, thereafter SGST or UTGST credit. Understood, pa? So these are the 4 rules that we need to remember. We will not get a standalone question like this, but in the regular question involving computation of net GST payable, there we will definitely apply this manner of utilization of ITC. Then we are moving on to the next area. So we have completed 2 sections so far. Section 41, that is procedure for availment of ITC or manner of availment of ITC, and section 49 subsection 5, manner of utilization of ITC. 41 is how to avail ITC. 49 subsection 5 is how to utilize the ITC. Is it clear? Now, conditions for availment of ITC. We have only 3 sections, 3 more sections. Total 5 sections we have by input tax credit chapter. Section 41, manner of availment of ITC. Section 49 subsection 5, manner of utilization of ITC. Section 16, conditions for availment of ITC. Section 17, apportionment of credit and blocked credits. Section 18, input tax credit in special cases. These are only that we have. Now look into section 16, conditions for availment of ITC. In this, first of all, what is ITC means? Input tax credit, okay, that is GST paid on inward supply. So what is that input tax? So CGST can I take as credit? Yes. So all GSTs I can take as credit. Even GST paid under RCM also I can take as credit, correct or not? So either tax paid under FCM or tax paid under RCM. On import also I will be paying IGST. That also can be taken as credit. Okay. So see the meaning of input tax. Input tax means CGST, SGST or IGST, UTGST, all GSTs. Okay. It also includes tax paid on reverse charge basis and IGST charged on import of goods. IGST charged on import of goods. Whatever GST paid on import of goods also can be taken, but it does not include tax paid under composition scheme. So whatever tax that is paid under composition scheme cannot be called as input tax, because first of all, a person who is opting for composition scheme should not collect the GST from the recipient. Even if he collects GST from the recipient cannot take that as ITC. Okay, again I am repeating, composition scheme is a simplified scheme for payment of tax at reduced rates, but the person opting for composition scheme has to pay that reduced rate out of his pocket. He cannot charge it to the recipient. Suppose by mistake if he charges it to recipient, can the recipient take ITC with respect to that? No. So that's why input tax definition excludes composite tax. Then see this section 16 subsection 1, 2 basic conditions are there for availment of ITC. Only a registered person can avail the ITC. Unregistered person cannot avail ITC. So of course, because to take ITC, first of all, we need to file 3B. Who will file 3B? Only a registered person will file 3B. So therefore, input tax credit can be availed only by a registered person, and unregistered person cannot take ITC. Then second basic condition, the inward supply should be used or intended to be used in the course or furtherance of business. What is the meaning of used? Used means we are using now. intended to be used. We are not using it now. We purchased it now. We might be using it in future. Can we take ITC now? Yes. Are you understanding? For example, we purchased 10,000 units. In this 10,000 units, 6,000 units we use now. 4,000 units is in closing stock, which we will be using in future. But can we take ITC with respect to that 4,000 units also today itself? And can we utilize for payment of liability? Yes. So it is not like section 32 depreciation. So you buy an asset, only when you use that asset, you can claim depreciation. Correct? Only if the asset is put to use in the previous year, we can claim depreciation. But this is not like that. Whether you used it or you have not used it, you purchased it, you can definitely take ITC. Understood or not? And used or intended to be used. But for what purpose it should be used or intended to be used? Course or furtherance of business. So ITC can be availed on inward supply used in the course or furtherance of business. You just write down there, intended to be used is also covered. Intended to be used. Intended to be used also covered. Intended to be used also covered. Intended to be used also covered. Course or furtherance of business. Course of business means for my existing business. Furtherance of business means some business which I am going to start in future. So course of business means existing. Furtherance of business means something which I am going to start in future. I purchase it now. So then also I can take ITC. So tell me what are the two basic conditions for availment of ITC? Come on. Only registered person can avail ITC. Second, inward supply should be used or intended to be used in the course or furtherance of business. Then next we have additional conditions for availment of ITC. So this is given in section 16 subsection 2. First, there are total 6 additional conditions that we have. Additional condition number 1 should be in possession of the tax paid document. If you want to take ITC, you should be having some tax paid document. What is the tax paid document? Invoice or debit note, some document you should have. So you should be in possession of tax paid document. Okay. So then should have actually received the goods or services. For example, I got invoice in January month, but goods are received or services are received in March month. Now when can I take ITC? January month or March month? I can take ITC in March month. Why March month? Should have actually received the goods or services. So just invoice if I have, that is not sufficient. I should have actually received the goods or services. So now there is one practical difficulty here. That is, so my GSTR 2B of January will contain the invoice details. But I am taking ITC in March month. So January month I have not taken ITC. I took ITC in March month. So but in March month 2B it will not be there. Are you understanding? I purchased goods in the month of Jan. Means invoice is in Jan month. So which means in Jan 2B it will be reflected. But in 3B of January I have not taken credit. Why I have not taken credit? Because I should not take credit, as one of the conditions for availment of ITC is that I should have actually received the goods or services. So as I have not received the goods or service in January month, so I cannot take ITC in January month. Okay. But in March month I am taking. But in March month GSTR 2B, this invoice is not reflected. Now there will be a mismatch, because I am taking more ITC than 2B for the month of March. So is this a problem? No, because even though we have taken extra ITC in 3B for March month than 2B, but we have not taken ITC in the month of Jan. So that only we are taking in the month of March. So we can do that way. But now what will happen is that one system generated mail we will get stating that for the month of March you have taken more credit than 2B. So what is the reason for taking more credit? So now we need to give a reply to the department stating that January we have got an invoice, but we received the goods or service in March month. So this ITC pertains to Jan, which not taken in the month of Jan. So we are availing in March. You understood? So practically, this is not for exam. This is only for practicality purpose. Now, for exam point of view, what you need to remember, when we can take ITC, only when we received the goods or services, not just on the basis of invoice. So what are the two conditions? First, you should be in possession of tax paid document. Second, you should have actually received the goods or services, and the tax should have been paid on such inward supplies. Tax should have been paid on inward supplies. But here we have a relaxation. What is that relaxation? Even though supplier not paid the tax, we can take ITC. Correct? Just now we started with that only here. Section 41. What does I say? What is that I said? So GSTR1 filed by the supplier, but he has not filed 3B yet. Can we take the credit? Yes. So means he has not yet paid tax. Even then we can take the credit. But if he has not paid the tax in future, so then we need to reverse the credit. So therefore, for this condition, what is the relaxation? First we can take the credit. So but we should ensure that supplier is paying the tax. Because if supplier is not paying the tax, we need to reverse the ITC. That's why. So third condition, tax should be paid on that inward supply. If it is FCM who will pay the tax, supplier will pay. If it is RCM who will pay the tax, recipient will pay. Then recipient should have filed GSTR 3B. So because how can we take credit? Only by 3B. I told you, availment of ITC, utilization of ITC, reversal of ITC, all these things will happen through GSTR 3B. So GSTR 3B is one return which will be filed by every registered person in the 3B. So we will have table 4. In the table 4, ITC will be the table 4. So there we need to enter how much is the ITC that is available. So therefore should have filed 3B. Then number 5, supplier should report the details of invoices in GSTR 1 and it should be made available to recipient in 2B. Correct? So we have this also as a condition now. Supplier should file what? GSTR 1. Supplier should report these details in GSTR 1 and that should be made available to recipient in GSTR 2B. Now yet one more condition is also added. ITC relating to such supply has not been restricted in GSTR 2B. What is this? That is, in GSTR 2B, there is something called as ITC available and ITC not available. Like the two things we have, where in GSTR 2B. So, even though supplier reports the invoice in GSTR 1 and it came in 2B, but in 2B, in which place it should come? Under ITC available, ITC not available. ITC available means it should not be restricted in 2B. You understood or not? It should not be restricted in 2B. ITC relating to such supply has not been restricted in 2B. So tell me what are the 6 conditions? A person availing ITC should be in possession of tax paid document, should have actually received the goods or services, and tax on that supply should have been paid. Then recipient should file GSTR 3B, then supplier should file GSTR 1 and this data should be made available in 2B. Last condition, in 2B it should not be restricted. In 2B it should not be restricted. Okay. If it is restricted in 2B, even though it comes in 2B, but we cannot take as credit. Even though it is filed by a supplier in GSTR 1, but it is restricted in 2B. Why it will be restricted in 2B? Why it will be restricted in 2B? For that, we have one section, that is section 38, which you can see in returns chapter. So there is a connection to this in returns chapter. Take page number 182. So give a reference here. Refer page number 182. Why in GSTR 2B the ITC will be restricted? So in this section 16, conditions for availment of ITC, additional condition is there, and last additional condition, sixth point. For that sixth point, below you write, refer page number 182, because it has got a connection to page number 182, section 38 that we are connecting. Now, what is the point that we have discussed last? What is the point that we have discussed last? Supplier filing GSTR 1, but it is reflected in 2B and it is restricted in 2B. Why it will be restricted in 2B? You understood? Supplier filed GSTR 1, it came in 2B, but it is restricted in 2B. Why is it restricted in 2B? We need to understand. Okay. So that is given in section 38. As per section 38, they are telling that GSTR 2B will contain the details furnished by supplier in GSTR 1, and it contains ITC available and ITC not available. So as per section 38, again this section 38 is an amended section as per Finance Act 2022, so applicable for your exam. Okay. Auto-populated statement GSTR 2B. Is GSTR 2B an auto-populated statement? Yes. Based on GSTR 1 of supplier, and it contains two columns. What are the two columns? ITC available, ITC not available. Why ITC not available? ITC may not be available to the recipient as per 2B, even though invoice furnished by supplier in GSTR 1. Even though invoice furnished by supplier in GSTR 1, even though invoice is furnished by supplier in GSTR 1, but it will be restricted in 2B. Why? Because that supplier is a newly registered business under GST. Huh? What? You purchased from a supplier and that idiot has started business newly, because of which your credit is disallowed. You understood? Means he filed GSTR 1? Yes, he filed GSTR 1. So then why it is disallowed? Maybe he may not pay the tax. Maybe he may not pay the tax. So wait. Until the time he pay tax, we will not give you the credit. So he is a newly started business. How can we trust him? You understood? He is a newly started business. We cannot trust him. Department is telling we cannot trust your supplier. So he may not pay tax also. So wait. When he pay tax, we will give credit to you. Means until the point of time, even though he filed GSTR 1, where the ITC will be? ITC not available in 2B. Then when it will be moved to ITC available? Future. So which means it is my input tax credit. And first hurdle is what? It should be matched. Okay. So already it is suffering a lot. That is, whatever I paid my money I paid to supplier. That idiot did not file GSTR 1. Then I cannot take credit. Already there, Ghana. He filed GSTR 1. So at last I requested him, please file like that. He filed. Even when he filed, now department is telling that it will not be given. Okay. Even if God is allowing, like how priest will stop, like that. So even though supplier filed GSTR 1, but that bloody GST department is not giving the credit to me. Why it is not giving the credit to me? Because supplier is a newly registered business. Okay. Fine. Okay. Then we should not buy from newly registered people. Okay. Then next. Supplier has filed GSTR 1 but not GSTR 3B. GSTR 1 they filed, 3B not filed. Means what? Not yet paid tax. Not yet paid tax. Then whenever you make purchases from such a supplier, your ITC will be disallowed in 2B, even though they filed GSTR 1. Supplier liability in GSTR 1 is greater than GSTR 3B. Means what? He filed 3B. Listen. He filed 3B. See, 3B not filed means problem, no? Okay. He filed 3B. But in that 3B, he did not report full liability. GSTR 1 liability 10 lakhs. But 3B liability is only 2 lakhs. Means what? 8 lakhs he did not pay. You understood or not? So GSTR1 liability is more than GSTR3B liability. Okay. So supplier liability in GSTR1 is greater than GSTR3B. Then supplier ITC in 3B is greater than 2B. What is this? Supplier ITC in 3B is more than 2B. Means he has taken more ITC. Because of that, you are touching my ITC or recipient's ITC. You understood? All this is not a mistake of recipient. Then whose mistake? Supplier's mistake. For supplier's mistake, who is penalized? Recipient is penalized. Okay. So why like that, sir? That's how they created a section, and it went in Finance Act also, and it got approved also. Then what opposition is doing and sitting in the parliament, I don't know. So they need to discuss on this only mainly. Sir, this is harassment, sir. It is like, if my supplier is having an issue, then why I should be penalized? Then I should not buy from such supplier. Okay, pa, that is fine, future. I will not buy from such supplier, but already I purchased. What is the solution for that? So no solution for that. So it will be disallowed. Permanently disallowed? No. It will be ITC not available. Then whenever they want, they can put it under ITC available. So whenever supplier rectifies his mistake. You understood or not? So now we need to call our supplier. Boss, till the time you pay everything, don't expect money from me. Okay, I will not give money to you. So only when you pay everything, I will give money. Until that point of time, I will not release money to you. So like that, we need to stop that payment. Okay, some 20%, 30% payment we need to retain, and we need to tell to the supplier, only when you pay everything, I will release the payment. No other go here. Okay, because who is getting suffered? Because of the supplier's mistake, recipient. So what is the first reason, pa? Why ITC will be restricted in 2B? Supplier is a newly registered business. Number 2, supplier filed GSTR1 but not filed 3B. Supplier filed GSTR1 and 3B, but liability in GSTR1 is greater than liability in 3B. Number 4, ITC of supplier in 3B is more than 2B. Means whatever is eligible to him, he has taken more than that. Okay. Then next, supplier has received a demand notice and defaulted in payment of tax, and the default continues. Supplier is a bad boy. Okay. And you are purchasing from him. So how you know whether he will have a demand notice or not, etc. and all? You will not know. You will purchase everything in a good faith only. But supplier, he has not paid taxes. So therefore department gave a notice on him. Now as you purchase from such a kind of supplier, so the department will say this much ITC which you have taken on that supplier will be disallowed, which means it will be restricted. You cannot use that. Then supplier has not fulfilled the conditions of Rule 86B. Rule 86B says that we have to pay 1% of our liability through electronic cash ledger. Even though we have sufficient balance in the credit ledger, 1% of our liability we have to pay through cash ledger. That is Rule 86B. For example, my liability is say 8 lakhs. So my gross liability is 8 lakhs. My gross liability is 8 lakhs. My gross liability is 8 lakhs. And I have an input tax credit of 10 lakhs. Logically, I can use entire 10 lakhs for payment of 8 lakhs, na? Yes or no? But what Rule 86B says is that, Rule 86B says, so 1% of my gross liability I have to pay through cash only, which means how much will be payable through cash ledger, how much through ITC, how much through cash ledger. Through ITC I can use only 99%, and through cash how much I need to pay? 1%, which means 8 lakhs into 99%. 7,92,000 I have to pay through credit ledger, and 8,000 rupees I have to pay by cash. Why they created this provision, you know? Mainly to create a cash inflow to the government. Because if entirely credit is used for payment of liability, government will not get anything into their hand, cash. So that's the reason why So they wanted cash to meet the expenses. So that's the reason why they are telling. So even though you have enough balance in credit ledger, but you have to pay 1% of the liability through cash ledger. Okay. So therefore, if you are not complying with those provisions of Rule 86B, then also who is not complying? Your supplier is not complying. You are complying. Your supplier is not complying. So because of which, from such a supplier, you purchase any goods or services, your ITC will be restricted. Okay. So total 6 cases, ITC will be restricted in 2B. Even though supplier reports in GSTR 1. What are those 6 cases? Come on. Supplier is newly registered business. Supplier filed GSTR 1, not filed GSTR 3B. Supplier liability in GSTR 1 greater than liability in GSTR 3B. Supplier availed ITC in 3B more than his 2B. Then supplier has got a demand notice because of default. Okay. And then 6. Supplier has not complied with the provisions of Rule 86B. Now, from such a supplier, you are making purchases even though he filed GSTR 1, but this ITC may not be available. Now, see this. So, this is about section 38, which means that, so therefore, what is the conditions for availment of ITC? So, I have tax invoice and I received the goods or services and my supplier has paid the tax also. And even I am filing 3B and supplier reported in GSTR 1, it came in 2B. But finally, what you need to check, in 2B it should not be restricted. Why in 2B it will be restricted? Because of the section 38. Understood? Fine. Now go back to conditions for availment of ITC. So as there is a connecting point, that's the reason why I have referred this. Then next, section 16 subsection 3 you see. So we completed 16 subsection 1 and 16 subsection 2. So what are the total 8 conditions we had? 16.1 2 basic conditions, 16.2 6 additional conditions. Okay. Then 16 subsection 3, ITC not available if depreciation is computed on tax component. For example, you purchase an asset for 10 lakhs. And on the 10 lakhs, 1 lakh 20 you paid as GST. Now while computing depreciation under section 32 of Income Tax Act, block of assets method, you need to take how much should be added to the block, WDV of the block, so that you can take ITC. You purchase asset for 10 lakhs and you paid GST 1 lakh 20. So how much should be computed? Depreciation should be computed on what? 10 lakhs or 11 lakh 20,000? 10 lakhs. Only when you compute depreciation on 10 lakhs, that 1 lakh 20,000 can be taken as ITC. If you compute depreciation on entire 11 lakh 20, means that 1 lakh 20 cannot be taken as ITC. That is the 16 subsection 3. ITC not available if depreciation is calculated on tax portion. Then 16 subsection 4, time limit for availment of ITC. Already we studied yesterday. What is the time limit for availment of ITC? 30th November of the succeeding financial year, or date of filing annual return, whichever is earlier. And there is an exception. Re-availment of ITC reversed. That is, first we took the ITC within time limit. We reversed it. Why we reversed it? For example, section 41. Supplier did not file 3B. So whatever ITC we avail, we need to reverse along with interest. Again, supplier filed 3B. Can we take it back? Yes, we can take it back. But for the taking back, there is no time limit. Even it can be 3 years, 4 years also, we can re-avail. So first time availment only, we need to check the time limit. First time we avail within time limit. We reversed it. Again we are re-availing. For that re-availment, there is no time limit. Is it clear? So therefore, the time limit for availment of ITC is only for first time availment. Not applicable in case of re-availment of ITC. Then next we have some FAQs based on this. So we completed section 16, 4 subsections only we have, and in this some FAQs are there. What is the tax paid document on the basis of which ITC can be availed? So this already asked once a short note question. So total 4 documents pa. Total 4 documents on the basis of which we can take ITC. So as per section 16 subsection 2, first point you see. So conditions for availment of ITC. A person availing ITC should be in possession of tax paid document. So what are those tax paid document? Tax invoice. Tax invoice given by supplier to recipient, and tax invoice given by recipient to supplier. So generally who will be giving tax invoice to whom? Supplier will give tax invoice to recipient. But in one case, only one case, recipient will be giving tax invoice to the supplier, that is in case of RCM. Okay. So tax invoice given by supplier to recipient or recipient to supplier, that is one. Number 2, debit note. So when debit note will be given by supplier to recipient? Whenever there is a increase in the invoice value, debit note. Okay. And then number 3, on import, we will be filing one bill of entry. So that bill of entry contains the IGST paid on import. So bill of entry is also one of the document for availment of ITC. And number 4, input service distributor invoice, ISD invoice. That is, there is a head office which will take the credit and distribute the credit to the branch officers. So for distributing the credit, for example, corporate office is there here. Below corporate office, there are 4 branches. Now this corporate office will take the credit and distribute the credit to those 4 branches. For distribution of that credit, they will be giving a input service distributor invoice. So on the basis of that invoice also we can take ITC. So what are the 4 tax paid documents? What are the 4 tax paid documents? Tax invoice given by supplier to recipient or recipient to supplier. Number 2, debit note. Number 3, bill of entry. Number 4, ISD invoice, input service distributor invoice. Then next, when goods or services are not received but invoice is available, can ITC be availed? That is, generally one of the condition for availment of ITC is what? You should have actually received the goods or services. Now concentrate. So there is a supplier. There is a supplier who made a supply to Mr. A. So they gave invoice to Mr. A, but Mr. A asked the supplier to deliver the goods to Mr. B, his customer. So the goods are delivered to Mr. B. Okay. This is known as bill to ship to transaction. So Mr. A will be which address? Billing address or shipping address? Billing address. Mr. A will be billing address. Then Mr. B will be shipping address. Generally, in case of e-commerce transaction, we see this billing address and shipping address. For example, you want to buy something from Amazon and you buy it to your place. Thereafter, you send it to your friend as a gift. Now, this will incur unnecessary courier cost. Instead, you can place an order in Amazon. You can give your friend's address. So directly the product will be delivered there. So you don't have to pay any extra courier charges, but the invoice will be raised to you. For Amazon, you will be the billing address. Your friend will be the shipping address. Like that, supplier is raising invoice to Mr. A, but delivering the goods to Mr. B. Now, Mr. A cannot take ITC. Why Mr. A cannot take ITC? One of the conditions for availment of ITC is what? You should have actually received the goods or services. So A received goods? No. But A is having invoice. So therefore A cannot take ITC. Okay. Can B take ITC on this? No. Because B received the goods, but B is not having the invoice. So one more condition is what? You should be in possession of tax paid document. So therefore B did not get the invoice. Now both cannot take ITC. How practically it can be done? That's why they have created a deeming fiction. What is the deeming fiction? The date when shipping address receives the goods, it is deemed that the billing address has received the goods and the billing address can take ITC. You understood? So the date when shipping address has received the goods, it is deemed that the billing address has received the goods and they can take ITC. It is not only for goods, even for services it will be applicable. So supplier raising invoice to Mr. A, but rendering services to Mr. B. the date when B has received the services, it is deemed that A has received the services, so A can take ITC with respect to this. Now, this is what usually I will tell in class, that whenever you join coaching, say intermediate coaching and all, you pay the fees along with GST. So that particular GST, your parents can take credit under this deeming fiction. That is, for a coaching center, your parents will be the billing address and you will be the shipping address. Means they are rendering services to you, but they can raise invoice to your parents. So your parents can take ITC with respect to that. Okay. So because deeming fiction, the day when a student has received the services, it is deemed that, so the person to whom we raise the invoice has received the services. But only one condition we need to check. What is that? So the student should be part of the business of his parent, because any inward supply we can take ITC provided that inward supply is used or intended to be used in the course or furtherance of business. So if you are part of your parents' business, your parents can definitely take ITC with respect to that under this deeming fiction. Understood or not? So that is with respect to this. So see this, generally ITC cannot be availed, but there is an exception for the same. In case of goods delivered or services provided to a third person on the direction of the registered person, deemed to be received by the registered person. Okay, on the direction of registered person, the goods and services are received by a third person. So whenever the third person has received the goods or services, it is deemed that the registered person has received the goods or services and ITC is available to the registered person. So in case of bill to ship to transaction, which address can take ITC? Billing address can take ITC. Then, when goods are received in lots, how ITC can be availed? For example, we placed an order for 100 numbers of a particular product. First month they delivered 40. Second month they delivered 30. Third month they delivered 30. So 40, 30, 30, 100 they delivered in 3 months. And they raise invoice in the first month itself. Now, can we take ITC for 40 units in the first month? No. Then, when we can take ITC for all these 100 units, we can take ITC only on receipt of last lot or last installment. So, in case of goods received in lots or installments or batches, ITC can be availed only on receipt of last lot or batch. What if invoice is given separately? Say for example, they are sending first month 40 units now. For that 40 units, separate invoice. Second month 30 units, separate invoice. Third month 30 units, separate invoice. Then in that case, can we take ITC in the first month, second month and third month proportionate to 40, 30, 30? Yes. So only with respect to a single invoice, if the goods are received in lots or batches, only on receipt of last lot or last batch, we can take ITC. Then, what is the consequence if the recipient has not made payment to supplier? Very, very important point per concentrate. That is, I am a supplier, you are my recipient, I raised invoice to you. Now, you have not yet made the payment to me. Still, can you take ITC? You did not make payment to me. Can you take ITC? Anywhere it is a condition that recipient should make payment to supplier, then only recipient can take ITC. For example, you take conditions for availment of ITC, registered person only should take ITC. Okay. Inward supply should be used or intended to be used or used in the course or furtherance of business. You should be in possession of taxpayer document. I gave an invoice. Then you should have actually received the goods or service and I have provided the services to you. And supplier should pay the tax. But even if supplier not paid the tax, we can take ITC. And next, supplier should report the details in GSTR1. So nowhere it is a condition that recipient should make payment to the supplier, then only recipient can take ITC. So therefore, can you take ITC? Yes. But there is a condition here. You have to make payment to me within 180 days from the date of invoice. Sir, supplier raised invoice to the recipient. So recipient can take the ITC. But there is a condition that recipient should make payment to the supplier within 180 days from the date of invoice. Then so much of the ITC availed by the recipient, if not paid within 180 days, needs to be reversed. Understood? Again, I am repeating. Recipient not making payment to supplier within 180 days from the date of invoice. So much of the ITC availed by the recipient needs to be reversed after 180 days along with interest. And what is the rate of interest? 18% per annum. And from when it should be computed? Previously, it was computed from the date of availment, but now it will be computed from the date of utilization. You understood? So previously, it was computed from the date of availment till the date of reversal. So whenever you took the credit, till the time you are reversing the credit, previously we need to compute the interest. But now there is an amendment in this place which says that you need to compute the interest not from the date when you took, but from the date when you used it, utilized it for payment of liability. So till the date of reversal. Say this. ITC to be reversed or added to output tax liability with interest at 18% per annum if the value plus tax of goods or services is not paid within 180 days from the date of invoice. Upon payment, ITC can be re-availed without any time limit, because for re-availment there is no time limit na. Say within 180 days you did not pay pa, so you reverse the ITC along with interest. Again you are making payment after 180 days. You can re-avail it as ITC. Means in this process, what is the real loss for you? Interest. So, but interest paid cannot be availed as ITC. And interest computed on ITC availed, ITC availed and utilized, which means we should not compute only on availed and utilized from the date of utilization till the date of reversal. Previously it was date of availment till the date of reversal. Now they changed it to date of utilization till the date of reversal of payment. Now, so related to this, we have one question. Have a look into this, illustration 3, which is in page number 84. ITC restricted means where from you will first avail the ITC. No pa, first you have to avail the ITC and you have not made payment to the supplier within 180 days from the date of invoice. Then so much of the ITC availed you need to reverse. If ITC is restricted, where from you are availing the ITC? You are not availing ITC, then this provisions of 180 days, all this section itself is not applicable. So this section will be applicable when only when you avail the ITC. Okay. If you have, but no break break I did not give. I was explaining. Okay. So if the ITC itself is not availed, the reversal shall not arise. Then this 180 days condition, all these things will be irrelevant. Okay. So listen. So listen here, everything I will explain. Don't ask me doubts, because in the break you asked me, because when you ask doubts, others are thinking that it is a break so that they are leaving. Okay. So listen, concentrate. Important area I am discussing. Mr. Ashok, a registered supplier of hardware parts, supplied goods worth rupees 1,68,000 inclusive of CGST 9,000 and SGST 9,000 to Messrs. Shah Traders under forward charge on 14/12/2022, for which tax invoice was also issued on the same date. So what is the date of invoice? 14/12/2022 is the date of invoice. And what is the value for which invoice is raised? 1,68,000 inclusive of GST 18,000, CGST 9,000, SGST 9,000. Then Shah Traders failed to make payment for such supply along with tax to the supplier and availed input tax credit of 18,000 as on 20/1/2023. Because what is the date of invoice? December, 14 December 2022. So you purchased in December. when you will take ITC with respect to the next month 20th. Because in 3B only you can take ITC. When you will file 3B, generally 3B due date is 20th of the month following every month. What is the 3B due date? 20th of the month following every month. What is the 3B due date? Generally 3B due date 20th of the month following every month. So therefore, you avail the ITC for December month on 20th January 2023. You avail the ITC. Such availed ITC is utilized for payment of GST liability of March 2023. So, you should compute the interest from when to when? March 2023 you should compute. Before amendment, we used to compute interest from Jan 2023. But we need to now compute interest from the date of utilization. Which month we utilized? March. March month, where we will utilize? Which statement we will utilize? Again, this is some nth time I am telling, availment of ITC, utilization of ITC, reversal of ITC will be done in GSTR 3B. Availment of ITC, reversal of ITC, utilization of ITC will be done in GSTR 3B. So GSTR 3B, when we will file? 20th of the month following every month. So when we have utilized March month, means where we would have utilized GSTR 3B. So when we would have filed the 3B of March month? 20th of April. So can you remember this? But please remember all these things till exam. Thereafter, if you forget also, no issue. Because then you have to learn indirect tax only for CA final. Until that point of time, you don't have to remember at all. You forget everything. You throw the book like anything after your exam. But until exam, kindly remember this. So, availment of ITC, reversal of ITC and utilization of ITC, we will do in which statement? GSTR 3B. When we will file 3B? 20th of the month following every month, we will file GSTR 3B. Correct? So, therefore, we utilized in March month. They have not given which date. So, what is the date you need to find? What is the date? 20th of April. Not 20th of March pa. In a March month we will not file 3B pa. March month we will file 3B on next month 20th pa. So 20th of April. After March, the next month is April. Because January, February, March and April. April is the next month. So 20th of the month following every month. So therefore, what is the date of utilization? 20th of April 2023. You katrampa yanakagadu ulunga solungappa please. So 20th March is not the date. 20th April 2023 will be taken as the date of utilization of ITC. So interest should be computed from 21st of April 2023. Previously, we used to compute interest from 21st of January from the date of availment. Now, we need to compute interest from 21st of April 2023. That is from the date of utilization. Now, we are reversing the ITC from the date of utilization till the date of reversal. Now, starting point for interest computation we understood. Now, what is the ending point for interest computation? Till the date of reversal. Now, for that, first we need to know when 180 days is completed. For which month 180 days is completed? So, what is the date of invoice? 14 December 2022. For this 14 December 2022, you add 180 days. Because what is the time limit within which we need to make payment to supplier? 180 days from the date of invoice. What is 180 days from the date of invoice? So 14 December. In December, how many days? 31 minus 14. 17 days in December. Then 31 days in Jan. Then 28 days in February. then 31 days in March, then again 30 days in April. So next 31 days in May. So now how many days so far? 168 days. So what is the balancing figure? 12 days in June. So therefore 14 December 2022, 180 days will be over on 12th June 2023. So now you will reverse after completing 180 days only na, because if you make payment within 180 days, this reversal shall not arise. So the reversal shall arise only when you are not making payment within 180 days. So therefore the reversal will happen within 180 days or beyond 180 days. Beyond 180 days means after 180 days. Which month 180 days is completed? June. 12th June. So by June you have to make the payment 12th June. As you did not make payment by June, so for the month of June you will do the reversal. So on which date you will do the reversal? 20th of July. Super pa. So reversal we will do in GSTR. Which form we will do reversal? GSTR 3B. GSTR 3B for June filed on 20th of July. So therefore we will compute interest till 20th of July 2023. So what is the interest computation period? Interest at 18% from the date of utilization. From the date of utilization till the date of reversal. Till the date of reversal. Okay. From the date of utilization till the date of reversal. What is the date of utilization? We utilized in March. So for March month 3B due date is 20th of April. So 20th of April 2023 till the date of reversal. So date of reversal. So 180 days is completed on June. So for June we are filing GSTR 3B on 20th July. So till 20th July 2023. Please don't count 20th because 20th only we utilize. So we need to count interest from 21st of April. So therefore number of days for computation of interest. So in April month how many days? 10 days. Because 20th you should not count, from 21st you should count. So in April 10 days and in May 31 days and in June 30 days. So then in July 20 days. So April 10 days, May 31 days, June 30 days, July 20 days. So total 91 days. Only for 91 days we need to compute the interest. And interest computed on what? Total value plus tax. So because this interest we are paying to government. Whenever we are paying interest to government, the interest should be computed on tax component. Okay. So what is the tax component? 18,000. So 18,000 into 18% into 91 divided by 365. 808 rupees you have to pay as interest. So therefore we need to reverse 18,000 plus we need to pay interest 808. Whether share trader is eligible to avail input tax credit? Yes, they can take input tax credit first. So first they are taking input tax credit 18,000 on 21/2023 and thereafter date of invoice is 14/12/2022. So 180 days is 12/6/2023. So as they have not made payment by 12 June 2023, therefore they need to reverse along with interest. Now, what is the input tax they avail? 18,000. Date of availing 21, but the date of utilization is 24 because March month only they utilize. So 24. Date of payment of ITC added to liability, that is reversal of ITC. For June month we filed GSTR 3B on 20th July. So the number of days, 91 days. Interest will be 808. So total amount that we need to reverse will be 18,000 as ITC and we need to pay interest of 808 rupees. And again this 18,000 can be re-availed as ITC? Yes. When, as and when the recipient makes payment to the supplier. So, measure short traders can take benefit of recredit of 18,000 as and when payment is made to supplier after 12/6. But only 18,000 can be availed. But this 808 is loss, completely gone. So that we will never get the benefit. Okay. This is the mistake, or this is the problem with respect to not making payment within 180 days. So the loss is literally that interest will be the loss. But thank God, interest is now not computed from the date of availment, it is from the date of utilization. What if the availed ITC we have not utilized at all? Whether we need to pay interest or no need to pay interest? No need to pay interest. If we avail the ITC, we have not at all utilized it, we just kept it, and now when we reverse, should we pay interest? No, because we have not utilized the ITC. So that is the advantage we have now. So this information is given in Rule 37. So come back to page number 83. You understood this illustration, pa? Guaranteed, pa. This illustration will guarantee come. Okay, because this is an amendment, May 23 exam. So only first applicable for your exam only. Definitely this illustration will come. That too, it involves interest computation and all. Not necessary ditto this question, but similar lines. In these lines you will get a question. Okay. Reversal of input tax credit in case of non-payment of consideration. Rule 37 of CGST rules. First, supplier raises invoice to the recipient. Recipient can avail the ITC. Payment is not made to supplier within 180 days of invoice. Now, reversal of interest reversal of ITC along with interest at 18% per annum. Interest computation period. What is the interest computation period? Date of utilization till the date of reversal of such ITC. Treatment in case of proportionate payment. What is this? For example, within 180 days, I paid 60%. Then I should do reversal only for 40%. Okay. Then within 180 days, I paid 30%. So I should do reversal only for 70%. The taxpayer is liable to reverse the proportionate ITC attributable to the portion of value which has not been paid within 180 days. But amended Rule 37 is silent about whether taxpayer is liable to reverse entire or proportionate ITC. Student should reverse proportionate ITC as clarification is provided in this regard. Okay. So Rule 37, even though silent, but there is one clarification, it has been provided by CBIC, which says that you reverse only proportionate. So what you said is correct. Full ITC we don't have to reverse. How much extent we have not paid within 180 days, to that extent only we need to reverse. Then whether the rate of interest is 18% or 24%, in this case it is 18% only, and that has been notified in Finance Act 22. Then no interest if such ITC availed is not utilized. So that's what we have discussed. Suppose we avail the ITC and we have not utilized at all, then whether we need to pay any interest in this case? No. So no interest would arise if ITC availed is not utilized and there is sufficient ITC balance in the electronic credit ledger from the date ITC is claimed. So this is about that non-payment of consideration within 180 days. And in 3 cases, this point 180 days condition is not applicable, which means don't refer to this 180 days condition and don't compute any interest. What are those 3 cases? If the supply is covered under RCM, if the supply is covered under RCM, who is having liability to pay GST to government? Recipient. So therefore 180 days condition is not applicable there. Then deemed supply without consideration, 71C. In case of 71C, first of all, there is no consideration. Wherefrom recipient will make payment to supplier within 180 days. So therefore, that is 180 days not applicable. Then C, that is 15.2b. 15.2b is what yesterday only we discussed. Any amount paid by the recipient on behalf of supplier to some other person, but it is not paid to supplier. Okay, but paid to some other person na. So within 180 days. So therefore this 180 days condition not applicable. Because addition made to value of supply on account of supplier liability being incurred by recipient, because supplier is not getting that money. If supplier is not getting that money, then 180 days we need to reverse, but that is not applicable because the payment is made to some other person on behalf of supplier. So in these three cases, we don't have to check 180 days condition. So this 180 days condition alone in section 16 is very, very important. So this illustration 3 you mark as important, then 2 more FAQs. With that, section 16 is over. What is the meaning of inward supply on which ITC is availed? Inward supplies are divided into 3: inputs, input services, and capital goods. Inputs means, already I told you, those goods which are purchased and charged to P&L is known as inputs. What is capital goods? Goods purchased and capitalized in the books of the purchaser is known as capital goods. Then what is input service? Any service received will be known as input service. What are the contents of invoice for availing ITC? That is, there is a document. The document do not contain all the contents, but some basic details if it is there, then also it will be called as invoice for availment of ITC. What are the basic details that should be present in a document to be called as invoice? Total 6. Supplier GSTIN, recipient GSTIN, description of goods, value of goods, tax, and place of supply if it is interstate supply. These are the minimum details that should be present. What are they? GSTIN of supplier, GSTIN of recipient, description, then value, then tax, and then place of supply. These minimum details should be there. Then the document will be called as invoice for availment of ITC. Even though the document is not containing signature, the document is not containing HSN or SAC, etc. So then also it will be treated as document for availment of ITC. Then one important point which I did not discuss in relation to 180 days. Suppose if the credit period given by the supplier itself is more than 180 days. If the credit period given by the supplier itself is more than 180 days, then in that case, the recipient as per contract is not required to pay within 180 days. Even then the recipient has to reverse the ITC? Yes. So because contract whatever is entered between the parties is irrelevant for GST purpose. For GST purpose, whether recipient is making payment to supplier within 180 days or not made payment to supplier within 180 days, reverse the ITC along with interest. Okay. Then after 180 days, suppose reversal of ITC happened. After 180 days, we paid 60% only to the supplier. How much can be re-availed? Only 60% can be re-availed. So we reversed fully pa. Thereafter we paid money to the supplier only 60%. To whatever extent you paid to the supplier, that much only can be re-availed as ITC. So you paid 60% means 60% only you will re-avail. You paid 40% means 40% only you will re-avail. Is it clear? Then look into this illustration 4. So this illustration 4 is on section 16, all provisions, connecting all provisions. XYZ Limited is engaged in manufacture of taxable goods. Compute ITC available with XYZ Limited for the month of October 2023 from the following particulars. Inputs A 1 lakh, one invoice on which GST payable was 10,000 is missing. Can we take entire 1 lakh as credit or 90,000 can be taken as credit? 90,000. Why can't we take entire 1 lakh as credit? Because one of the condition for availment of ITC is that a person availing ITC should be in possession of tax paid document. So tax invoice is a tax paid document. As this tax invoice is missing, so this person cannot take ITC with respect to 10,000. Then how much ITC can be taken? Only 90,000 can be availed as ITC. Then inputs B 50,000. Inputs are to be received in 2 installments. First installment has been received in October 2023. Right now we are computing for the month of October 2023. This is the first month in which we received first lot. Then balance will be received in future. So can we take ITC now? Why? ITC can be availed only on receipt of last lot. So therefore, this is the first month in which we received first lot. So we cannot take ITC now. Full ITC we can take only on receipt of last lot. Capital goods 1,20,000. XYZ Limited has capitalized the capital goods at full invoice value inclusive of GST. Capitalized the capital goods at full invoice value inclusive of GST, and they are calculating depreciation on full invoice value. Can we take this as ITC? Why? Section 16 subsection 3 says, while computing depreciation, if you are adding GST component and compute depreciation on that, you cannot take ITC. Then input services 2,25,000. One invoice dated 21/2022 on which GST payable was 50,000 has been received in October 2023. What is the date of invoice? 21/2023. Means what is the financial year? Financial year 2021-22. For this financial year 2021-22, so one second, I'll just change this little bit to 2023. 21-2023. Now answer. What is the financial year? 2022-23. For the financial year 2022-23, what is the time limit for availment of ITC? A. 30th November 2023. So what is 30th November 2023? Or B. Date of filing annual return. Now see the last line. The annual return for financial year 22-23 was filed on 15 September 2023. So 15 September 2023, whichever is, which is earlier. So which means we should take ITC by 15 September 2023, but right now we are in which month? So on this 50,000, can we take ITC in October month? No. So therefore, on this 50,000 we cannot take ITC, then it will be 1,75,000. So the answer is 90,000 plus 1,75,000, 2,65,000. On this 2,65,000 only ITC can be availed. Understood? So here we are taking one assumption that all these inward supplies are reflected in GSTR 2B. So means supplier has filed the GSTR 1. Suppose in these invoices, any one invoice, if supplier has not filed GSTR 1, even though it is eligible, but we should not take the credit because it is not reflected in 2B. Okay. So that is with respect to this section 16, conditions for availment of ITC. Clear here? Okay. Now we have section 17, apportionment of credit and blocked credit. In this, apportionment of credit is simple. Concentrate. I have some inward supplies which is used for taxable outward supplies. I have some inward supplies and these inward supplies are used for taxable outward supplies. Taxable outward. Can I take ITC? Can I take ITC? Yes. Then I have some inward supplies. I have some inward supplies which is partly used for taxable and partly used for exempted. Exempted outward. Can I take ITC? No. Can I take ITC? Yes. But how much ITC I can take? Proportionate ITC I can take. To what proportionate I can take ITC? Taxable proportion. Means how to compute that proportionate ITC? Total ITC into taxable divided by total. For example, if the total ITC is 1,20,000 and the taxable turnover is 15 lakhs and exempted turnover is 5 lakhs. Okay. Then how much is the proportionate ITC that I can take? Total ITC 1,20,000 into 15 divided by 20. 90,000 I can avail as proportionate ITC. So when inward supply is used for taxable outward supply, full ITC we can take. When inward supply is partly used for taxable, partly used for exempted, proportionate ITC we can take. That is total ITC into taxable divided by total. Suppose if inward supplies are fully used for exempted outward supplies, if inward supplies are used for exempted outward, can we take ITC on inward supply? No, we cannot take ITC on inward supply. This is only given in section 17 subsection 2. So goods and/or services used partly for making taxable and partly for exempted, ITC available only attributable to taxable supplies, means proportionate ITC to taxable supplies. And here if you see zero rated supplies, in case of zero rated supplies actually we have two options. Either we can pay IGST or no need to pay IGST, but even then it will be treated as taxable only. So zero rated supplies, whether you pay IGST and get refund or don't pay IGST and get refund of ITC, so whatever the case may be, your burden is zero, but it will not be treated as exempted for ITC purpose. For ITC purpose it is treated as taxable, which means I can take ITC on my inward supply when my outward supply is zero rated. In this regard, one super point is there. There is a product which is exempted. There is a product which is exempted. But that exempted product, we cannot take ITC. Correct? We are making a product which is exempted. Now we have inward supply with respect to that product. We cannot take ITC. Am I right? We purchase some raw material used in making a exempted product. Can we take ITC on that raw material? No. Now this exempted product is exported or supplied to SEZ. Now it will become zero rated. As it becomes zero rated, so we can take ITC on the raw material purchased. Is it clear? So right now the product is exempted, so ITC not available on inward supply. But the moment the exempted product or exempted service is exported or supplied to SEZ, it will become zero rated. When it becomes zero rated, can we take ITC on inward supply? Yes, that is this. Then same way, we have some inward supplies which is used for business purpose. We have some inward supplies and that inward supplies is used for business purpose. Business purpose. Can we take ITC? Yes or no? Yes. And we have some inward supplies. We have some inward supplies which is partly used for business and partly used for non-business, means personal purpose. Can we take ITC? Yes. Which ITC? Proportionate ITC. But here we need to know the ratio that should be given in the question itself. We need to know the ratio that is to be given in the question itself. Say 60% we used for business and 40% we used for non-business. Then how much ITC available? 60%. So of the total ITC, if total ITC is 1,20,000, 1,20,000 into 60%. So this percentage, business and non-business, will be given in the question itself. Then suppose if we have inward supplies and that inward supply is fully used for non-business purpose, means personal purpose, can we take ITC? No. That is given in 17 subsection 1. Goods and/or services used partly for business and partly for non-business, ITC available only as attributable to business purpose. Only to the extent of business purpose ITC available. Okay. So then we have seen 17 subsection 1 and 17 subsection 2. So what is in short 17.1 and 17.2? We can take proportionate ITC when inward supplies are partly used for business, partly used for non-business. We can take proportionate ITC when inward supplies are partly used for taxable, partly used for exempted. We'll take a break and thereafter we will see the meaning of exempted supplies and other aspects. So we will meet at 11:10 pa. 15 minutes I am giving break. Okay, we'll start pa. See this. Meaning of exempted supplies. You can see in page number 88. meaning of exempted supplies, that is general meaning of exempted supplies, we have three, which we discussed in segment number 2, notified as exempted, nil rated and non-taxable. These three are the general meaning of exempted supply for payment of GST. But for the purpose of availment of ITC, we have many other transactions also meaning of exempted supply. So that is what we are trying to understand here. That is, first for payment of GST, what it is, and for availment of ITC, what it is. So I told you these three. What are these three? Notified as exempted, nil rated and non-taxable. These three are treated as exempted supply for payment of GST. Even these three are treated as exempted supply while computing ITC, because while computing ITC, we take the proportionate ITC. How we will take proportionate ITC? Proportionate ITC is based on total ITC into taxable divided by total. What is the total? Taxable plus exempted. Taxable plus exempted. So therefore, total is taxable plus exempted, and what should be taken as this exempted is what we are trying to understand. Again I am repeating, proportionate ITC is total ITC into taxable divided by total. Total is taxable plus exempted. So what is taxable we know, on which we pay GST. What is exempted? So that exempted meaning only we are trying to understand. What are the 3 points that we have learned so far in exempted? Notified as exempted means from time to time through notification government will be giving few transactions as exempted, that exempted supplies. Then nil rated supplies means rate of GST is nil. Then non-taxable supplies, that is alcoholic liquor for human consumption and petroleum products. So these three. Apart from these three, sale of land, sale of building, sale of securities, actually these three are not at all supply for payment of GST, but they will be treated as exempted supply while doing ITC computation. So this is given in 17 subsection 3. Why they are doing that way? Mainly to reduce the ITC availability to a person. So for example, total ITC is 1,20,000 and taxable turnover is 15 lakhs and exempted turnover is 5 lakhs. This is the example we have seen. Taxable turnover and exempted turnover. So 5 lakhs exempted turnover. Now what is the proportionate ITC? The proportionate ITC is, so 1,20,000 into 15 divided by 20, that is 90,000. So this is the general. Now what happened? I sold a land. I sold some land. When I sold some land, the land value, sale value of land is say 20 lakhs. Sale value of land is 20 lakhs. Now automatically the proportionate ITC will change. How? So proportionate ITC, what they are telling, even though land is not a supply, but you need to treat it as exempted supply, which means a proportionate ITC will be 1,20,000 into taxable divided by total. What is taxable? 15 divided by total. In total what I should take? 15 plus 5 plus 20, that is 40. Then automatically the ITC will be 1,20,000 into 15 by 40, 45,000. What was my ITC? 90,000. That is the real ITC. But because of considering sale value of land into the meaning of exempted supply, what happened to the ITC availability? It has reduced. It has come down. You understood this scam that government is doing. So sale of land is not at all a supply, but they are asking us to treat it as exempted supply. So the available ITC will come down. Now what a taxpayer will do? Taxpayer will say, okay, if that be the case, then I don't have any, common ITC. Everything used for taxable only, like that he will say. You come and check, okay? You come and check. I'm using all inward supplies for making taxable supplies only. So common ITC, if it is there only, now your problem is like that. So common ITC not there. Inward supply used for taxable and inward supply used for exempted. We don't have common ITC. So that is what actually government will make some stupid provisions. Because of that only taxpayers will try to evade that and escape from payment of GST. Because in break someone asked me, sir, if it is inward supply used for non-business purpose, how government will come to know, sir? I will buy that and it may be my personal asset. I will be using it for my business, like that I will take ITC. Yes, government will not know. So you can do that. But there is something called as GST audit. GST audit is not applicable to everyone. So it is not conducted by chartered accountant, cost accountant. Chartered accountant, cost accountant means the taxpayer can correct the chartered accountant, cost accountant by paying some money. But it is done by the GST department. And GST department, not every officer will take bribe. You understood or not? Because recently I was caught with a traffic police near that Pachapas signal. And I was not wearing helmet. And so fine, 1,000 rupees fine, and 1,000 rupees fine. So I said, sir, I will give 500 rupees, leave me. So he said, no, I don't need 500. So he then generated a challan. He generated a challan. I said, I have only 500 rupees cash and I will give that 500 rupees cash. No, so I don't need bribe. I will generate challan. If you don't have money also, it's okay, you pay later. But you have to pay the fine, whatever is given. So now, when some officers are that much strict and all, so we can't do anything. So they will definitely ask, okay, you purchase the goods and where is it in the business? Sir, it is not in business. Then where? It is in my home, sir. Then it is used for personal purpose. So therefore, they will disallow the credit at that time. And added to that, they will even ask us to pay the interest and penalty also. So that's how practically it works. That is, whenever we are learning the provisions, you should not think, okay, if I am not doing this, how government will know? You have to, daily get up and go to toilet, then bath and then eat. No, I will sit in toilet and I will eat. Who will ask? Who will disturb you? No one will disturb you. Some people are setting the rules. This way, you should live like that. No, I will not do that way. So morning, sitting in kakus, I will eat. Eat. What is your problem? No one will stop you. It is your headache only. Because of that, you may get some infection, disease, etc. and all. So you face the consequences. Be ready to face the consequences when you commit the offense. Simple, okay? So for that reason, don't ask me if I do that way, how department will come to know. They have some ways to find. They will find and they will, try to collect it. So, but the provisions what we are discussing is that this is how it is created in the law. We can't do anything with respect to that. Only way we can do is that, so we have to use our vote right properly and we should elect proper people and then proper people will make the proper law. Till the time we are selling ourselves for 2,000, 3,000, 5,000 rupees. So we get lawmakers like this only. So buffoons only will become lawmakers and they create a law like this only. We can't do anything with respect to that. Then, so sale of land, sale of building and sale of securities, this is atrocious that it is not a supply but it is treated as exempted supply. And what should be taken as the value? In case of land, building and securities, stamp duty value should be taken as exempted supply in case of land and building. In case of securities, 1% of the sale value of securities will be taken. So, land and building, what will be taken as a value? Stamp duty value. In case of securities, we take 1% of sale value of securities. Then, next one. Supply covered under RCM. Actually, it is taxable supply. Who will pay GST? Recipient will pay GST. But for ITC computation, where we need to keep it under exempted supply. This I discussed while discussing the author point. Author will be opting for FCM, because if author opts to pay GST under RCM, then he cannot take ITC on inward supply. So therefore, when my outward supply is covered under RCM, for me it is treated as exempted supply. I cannot take ITC on inward supplies. Okay. So far we have seen 7 points. First 3. What is the meaning of exempted for ITC purpose? Notified as exempted, nil rated, non-taxable. Again, next 3, which are not at all supply but treated as exempted. Sale of land, sale of building, sale of securities. Land and building take stamp duty value. Securities take 1% of sale value of securities. Then outward supply covered under RCM. Outward supply covered under RCM is also treated as exempted supplies. Then next, interest on loans, advances, deposits is actually exempted. But for ITC purpose, it will be treated as taxable. So far what we have seen, not at all supplies treated as exempted. Now we are discussing there is a really exempted supply, but that is not treated as exempted, but that is treated as taxable. But what they have kept as exempted is big: land, building, securities. Interest is actually a marginal income, so that they are keeping as taxable. So they are telling, enjoy, we are making it taxable, you can enjoy the ITC. But really that interest income is major to whom? Bank, financial institution, NBFC. For them this point is not applicable. You understood? Where really they need to give, there they did not give. So bank, financial institution, and NBFC, interest on loans, advances, deposits is treated as exempted only for availment of ITC. But for others only, interest is treated as taxable for availment of ITC. Done? Then transportation of goods by vessel from India to outside India. So vessel, we discussed in yesterday's session, vessel, international waters, both ways will be taxable at present. India to outside India also taxable, outside India to India also taxable. So you need to remember the updated provision. What is the updated provision? With effect from 1/10/2022. For your exam, this is only applicable. For payment of GST, it is taxable. So even for ITC purpose also it will be taxable. There is nothing special. But up to 1/10/2022, this was the provision. So exempted it was for payment of GST, but it is treated as taxable. But this is not applicable at present. So you can ignore this point fully. Okay. So why I have given this, because maybe you would have studied some old provision. So that's why I have given this. This is not applicable at present, which means only one point you need to remember, which is actually exempted but treated as taxable. What is that? Interest on loans, advances, deposits. That too for a person other than bank, financial institution, NBFC. Then export of goods or services and supply of goods or services is what? Zero rated supplies. And the zero rated supplies, even though we have two options for payment of GST, but for ITC always it will be treated as taxable. Now you need to remember only 8 points per. Okay. So what are the 8 points that you need to remember? This, because this 9th point is at present not applicable. 10th point already you know. So what are the 8 points you need to remember? Come on. What is the meaning of exempted for ITC purpose? Notified as exempted, nil rated, non-taxable. Then sale of land, sale of building, sale of securities. Land and building, stamp duty value. Securities, 1% of sale value of securities. Then supply covered under RCM. Then last point, interest on loans, advances, deposits, even though it is exempted for payment of GST, but while computing ITC it should be taken under taxable, and this is not applicable in case of a bank, financial institution, NBFC. Apart from this, any other transaction, if it is taxable for payment of GST, it will be taxable for ITC. If it is exempted for payment of GST, it will be exempted for ITC. If it is not a supply for payment of GST, ignore it for ITC purpose. Is it clear? So these 8 points only you need to remember, pa. Apart from this, any other transaction, for example, sale on high C basis. Sale on high C basis is what? For payment of GST, excluded from supply. So even for ITC, you will not consider it as supply. Then, so taxable supplies, you will consider it as taxable. Exempted supply for payment of GST, you will treat it as exempted. Understood or not? Then, note 2, you see, I am a manufacturer and I am purchasing some raw material, input service and capital goods. Using this raw material, input service and capital goods, I make some finished goods. So generally, finished goods, so if I need to create a good marketability, I need to give these finished goods as samples. So therefore, these finished goods are given as gifts or free samples. For example, lot of this hair oil and shampoo products and all. So initially when they are launching, they will be giving sample sachets. So small sachets they will be giving. So like sample packs, so that people will start using it. And if they like that product, then they will start purchasing the product. So I manufacture some product which I am giving as gifts or free samples. Is it supply or not a supply? Is it 7(1)(a)? Why it is no? Because there is no consideration. Superb. 7(1)(b), no, because it is not import of service. 7(1)(c), disposal of business asset on which ITC availed. No, because what I avail ITC is inputs, input service, capital goods. But what I am disposing of is finished goods. Whether I purchase the finished goods? No. So therefore, it will not come under disposal of business asset. Related party? No. And principal agent transaction? No. Consequently, it is not a supply. Correct? But as per CBIC circular, we should treat it as exempted supply, and we need to take the proportionate ITC on inputs, input service and capital goods, which means we need to treat these gifts or free samples as what? Exempted turnover. Understood or not? So what is the 9th point that you need to remember? Already 8 points you remember. Now 9th point, come on. If any manufactured goods are distributed as gifts or free samples, it should be treated as exempted supply, and we need to avail the proportionate ITC. Full ITC not available, only proportionate ITC available. Then next note you see, inward supplies given as gift along with a product. For example, I am manufacturing and selling one health drink, and health drink along with health drink, for example Boost, Bonvita, etc. So this health drink, if I need to make it popular exactly this time, summer holidays, okay, so summer holidays, if I need to make this product popular, I need to give some gift, one bat or one like school bag or one zipper bottle, something I will give as a gift. You understood or not? But this gift, am I manufacturing? No. I manufactured this health drink and I am purchasing the product as, I am purchasing one product, and that purchased product is given as a gift along with this article. Now, one sold product along with one gift, it will be treated as what? Composite supply or mixed supply. Correct? Now, this will be treated as a single supply and I will pay GST on that. So, can I take ITC on the gift that I am purchasing? Yes. So, I can take ITC. Why we need to discuss this point? Because generally, if any goods are purchased and distributed as gifts or free samples, ITC not available. But if the gift or free sample is along with another product, now it will be treated as composite supply, mixed supply. So, ITC available. That is this note 3. See that. Inward supplies given by supplier along with the product as quantity discount or gift. Now it will be treated as composite supply, mixed supply. So ITC available on that inward supply which is given as gift along with the product. Okay. Then next note 4, there is a trader. That trader is purchasing some goods and giving it as gifts or free samples. And on these purchases, they availed ITC. Now, will it become supply under 7(1)(c)? Yes, where disposal of business asset on which ITC availed. For example, some traders, what they will do, in order to push their sales, they will be giving, if you buy for 500 rupees, So 2 soaps free. If you buy for 1000 rupees, you will get 1 kg rice free. Like that they will be giving offers. So therefore, this free product also they will purchase na. Whatever they are giving us free also they will purchase on that ITC availed. So now when it is given, it will become disposal of business asset on which ITC is availed. Okay. Again they can take ITC on inward supply. So this is what I said in that employer-employee example. Employer purchases a mobile along with GST. If the mobile value is more than 50,000, it will become supply under 71C. Correct? Now can the employer take ITC with respect to that mobile purchased? Yes. Generally, these are all exceptions to inputs purchased and given as gifts or free samples is blocked credit. But for that, we have this as exceptions. Okay. Now, so what is in short you need to remember? Any goods distributed as gifts or free samples, if it becomes supply under 71C, we can take ITC on the inward supplies. Okay. Next, look into this illustration, illustration 5. Measures ABC Traders has made taxable outward supplies of 20 lakhs, GST at 12% and exempted outward supply of 10 lakhs, and in the 10 lakhs, interest income is 4 lakhs and other exempted supplies 6 lakhs. During July 2018, their inward supply for the month is 10 lakhs, excluding GST at 10%. Compute net GST payable. So in net GST payable, there are two parts. First, gross GST payable minus input tax credit, that is net GST payable. Now, please don't see the answer, concentrate. First, we need to compute the GST payable. For GST payable, whether on 20 lakhs should we pay GST? Yes. So 20 lakhs into 12%, how much? 2,40,000. Then on the 10 lakhs should we pay GST? No, because it is exempted. We don't have to pay any GST on that. So our gross liability is what? Only 2,40,000. Understood this point? Now minus ITC. In that ITC, what is the total ITC? How much is the total purchases? 10 lakhs. On the 10 lakhs, what is the GST paid? 10%. That is 1 lakh. But entire 1 lakh, can we enjoy as credit? No. Because this is used for both taxable and exempted, which means we need to take proportionate ITC. How to compute the proportionate ITC? Total ITC into taxable divided by total. What is the total ITC? 1 lakh. 1 lakh. 10 lakhs into 10%, 1 lakh into taxable turnover. From the question, you check and tell me what will be taken as taxable turnover. 20 lakhs, 24 lakhs. 24 lakhs. Why sir 24 lakhs taken as taxable? Just now we studied interest on loans, advances, deposits, even though exempted for payment of GST, but for computing ITC, it will be treated as taxable for a person other than bank, financial institution, NBFC. So therefore it is other than bank, financial institution, NBFC, ABC traders. Correct or not? So therefore they need to treat interest as dash for availment of ITC, taxable. So therefore numerator will be 20 or 24? 24, and denominator will be 30. How 30? 20 plus 4 plus 6. That is 30. So therefore 24 divided by 30, they can take ITC. So what is the 24 divided by 30? Calculate 1 lakh into 24 divided by 30. So 80,000, correct? 80,000 can be availed as ITC. So therefore 1 lakh minus 80,000, sorry 80,000, 2,40,000, 2,40,000 minus 80,000, 1,60,000 is the net GST liability. You understood how we got 1,60,000? First gross liability 2,40,000. Please respond. Are you listening or not? So gross liability 2,40,000. How we got 2,40,000? 20 lakhs into 12%. So first we need to prepare a table like this. For payment of GST, for availment of ITC, normal 20 lakhs, taxable for payment of GST. Even for ITC it will be taxable. But interest exempted for payment of GST. For ITC purpose it will be treated as taxable. Other exempted, it is exempted for payment of GST. For availment of ITC also it will be treated as exempted. So therefore, what we need to do is that, so first for payment of GST 2,40,000 is the liability. Now proportionate ITC is total ITC 1 lakh into these two should be treated as taxable. So 24 divided by 30, so 80,000. So 2,40,000 minus 80, 1,60,000 we will get as net liability. Understood? Then next question you see. Pacific International Limited, a shipping company registered in India, has made the following outward supplies for the month of September 2018. Actually, this provisions is as per 2018. So now we will modify it for the updated provisions, because for 2018 there is a change in the provision. What is that? Before 110-2022, transportation of goods by vessel from India to outside India was exempted for payment of GST, but for ITC it was treated as taxable. Now it is taxable both for payment of GST as well as ITC, so that's why I am just modifying the question. So Pacific International Limited, a shipping company registered in India, has made the following outward supplies for the month of September 2023. Okay, actually the question is answered as per the old provisions. Okay, Vapa. So, but we will answer this as per new provision. Whatever is there in the book is as per old provisions. Okay. First I will explain the old provision, then I will explain new provision, because depending upon the date you need to change it accordingly. That's why. So up to which date the old provision was applicable? 30/9/2022. Up to that date, transportation of goods by vessel from India to outside India was exempted for payment of GST. But for ITC purpose, it was treated as taxable. Now let's see that particular point. Transportation of goods by vessel from India to outside India, 20 lakhs. So up to 30/9/2022 it was exempted. So therefore this 20 lakhs exempted for payment of GST. For ITC purpose it will be treated as taxable. Then second one, transportation of goods by aircraft from India to outside India. So up to 30/9/2022 it is exempted. Okay. And even for payment of GST also it will be treated as exempted. Then transportation of goods by vessel from outside India to India, always taxable. So 15 lakhs will be taxable. On that the rate of GST is 12%, 18%. So therefore 15 lakhs into 18%, 2,70,000. So even for availment of ITC it is treated as taxable, because apart from those 8 points, anything else, if it is taxable for payment of GST, it will be taxable for ITC purpose. Then transportation by aircraft from outside India to India, it is exempted. We studied that. Outside India to India, aircraft is exempted both for payment of GST as well as for ITC purpose. Then transportation of goods by vessel from one place in India to another place in India, if it is for public transportation, goods, specified goods means exempted, other goods means taxable. We don't have specified goods, therefore taxable. 5 lakhs into 18%, and as it is not covered under the list of 8 points, so therefore it is others. If it is taxable for payment of GST, it will be taxable for ITC. So now based on that, how much is the GST payable? 2,70,000 plus 90,000. So that will be the gross liability. And then what is the gross liability? 2,70,000 plus 90,000, that is 3,60,000. Now ITC wise if you see, so total 50 lakhs we purchased. On that excluding GST at 12%, that is 6 lakhs. On that 6 lakhs fully we cannot take credit. 6 lakhs proportionate credit we need to take. So what are taxable for availment of ITC? 20, 15 and 5. So that is 40. 40 divided by total 55. So therefore 6 lakhs into 40 by 55. How much? 4,36,363. This is adjusted from 3,60,000. So excess ITC carried forward. So this is as per the provisions up to 39/2022. Now you make note of the answer if the same question is as per the updated provisions. Okay. So because depending upon the question, date in the question, we need to change the answer. That's why I am telling you. So now, answer to question number 6. Please write down in your notebook. Answer to illustration 6. Answer to illustration 6 in page number 90. If transaction takes place, if transactions take place with effect from 1/10/2022. Answer to illustration 6, page number 90. If transactions takes place with effect from 1/10/2022. First, particulars for payment of GST, for payment of GST, for availment of ITC. For payment of GST, then for availment of ITC. For availment of ITC. Now, what is the first transaction? Transportation of goods by vessel. From where to where? India to outside India. Now, see your book. See your book. So, we have discussed yesterday one provision. Transportation of goods. So, exemptions with respect to transportation of goods and transportation of services. So, what is that I told you in case of transportation of goods? Transportation of goods by waterways. What is exempted at present? We don't have any exemption at present when it comes to international, correct? Only inland waters and coastal waters specified goods is exempted. All other cases it will be taxable. So therefore, what is the updated provision for payment of GST? Taxable. And what is the value? 20 lakhs. So on the 20 lakhs, GST will be payable at what rate given in the question? 18%. All outward supplies taxable at 18%. So 20 lakhs into 18%. 3,60,000. Now, is it given under the 8 points that we remember? Notified as exempted, nil rated, non-taxable, sale of land, sale of buildings, sale of securities, interest on loans, advances, deposits? No. So, supply under RCM. It is not there in that 8 points. If it is not there in that 8 points, if it is taxable for payment of GST, it will be taxable for availment of ITC. Then, next. Second, what is the second transaction? Check the book. Aircraft. Aircraft, where to where? India to outside India. Aircraft, India to outside India. In case of aircraft, India to outside India, again, goods, transportation of goods by aircraft, international, only one is exempted. What is exempted? Outside India to India only exempted for payment of GST, but this is not there in the exemption, so taxable. And for payment of GST it will be 10 lakhs into 18%, that is 1,80,000. For ITC purpose also it will be treated as taxable. For ITC purpose also it will be treated as taxable. Then next, number 3, So why it is taxable for ITC purpose? Because it is not covered under those 8 points. Okay. Then next, vessel. Vessel from where to where? Outside India to India. Outside India to India. Vessel outside India to India. For payment of GST it is taxable. And what is the value? 15 lakhs. So 15 lakhs into 18%. 2 lakh 70,000. And it is not in those 8 points. So therefore it will be treated as taxable even for ITC purpose. Then next one. Aircraft. From where to where? Aircraft from outside India to India. Aircraft from outside India to India is what? For payment of GST, it will be exempted. So, as it is exempted for payment of GST, notified as exempted. So, even for ITC purpose, it will be treated as exempted. Then, next one. So, vessel domestic transportation. Vessel domestic transportation. Domestic transportation, what is exempted in case of transportation by vessel? So, in case of transportation of goods by vessel, coastal waters, vessel means coastal waters. So, only specified goods is exempted. Other goods will be taxable. So, here we don't have any information about specified goods, therefore, it will be taxable. And what is the value? 5 lakhs. So, 5 lakhs into 18%, that is 90,000. And is it in that 8 points? No. So, therefore, it will be treated as taxable for ITC purpose. Now, all transactions over. Now, we need to know 3 things for ITC purpose. For ITC purpose. What is taxable? What is exempted? And what is the total? For ITC purpose, what is taxable, what is exempted, and what is total? What is taxable? For availment of ITC, so taxable 20 lakhs, then 10 lakhs, 30 lakhs, then 15 lakhs, so 45 lakhs, then 50 lakhs. So 50 lakhs will be taxable. Then what is exempted for ITC purpose? Only 5 lakhs. So total 55 lakhs. Now, gross liability. Gross liability, if you see, gross liability is first. So wherever we have computed taxable, 3,60,000 plus 1,80,000 plus 2,70,000 plus 90,000, that will be 9 lakhs. So gross liability 9 lakhs minus ITC, proportionate ITC. Proportionate ITC. What is it? Proportionate ITC. Total ITC into taxable divided by total. What is the total ITC? Total ITC, check the question. 50 lakhs are total ITC, inward supplies, inward supply value 50 lakhs. On that 50 lakhs, what is the GST paid? 12%. This is the total ITC. Out of this ITC, how much is the proportionate that we will take? Taxable turnover to total turnover. What is the taxable turnover? 50 divided by 55. So 50 lakhs into 12% into 50 divided by 55. 5,45,545. Correct? 455. 5,45,000. 454.5. So therefore 455 we will take, and the remaining will be the net liability. Net liability is the balance, that is 9 lakhs minus 5,45,455, that is 3,54,545. This will be taken as the net liability. Now you understood how to arrive at the answer. See, this kind of question is actually not tested till November 22 exam. This type of question on exempted supplies. So this is an untapped area. They can make a question on this. It's a very good concept. You finished making note of this? Then, so we completed 17 subsection 3 meaning of exempted supplies along with the illustrations related to that, and look into the next area 17 subsection 4 special provisions for availment of ITC by banking company and financial institution including NBFC. For a bank, part of its outward supply is taxable and part of its outward supply is exempted. So because interest on loans, advances, deposits is exempted and remaining consideration received by bank will be taxable. So they have two options. They can take proportionate ITC. What is a proportionate ITC? Just now we discussed one, total ITC into taxable divided by total. That is known as proportionate ITC. Whereas option 2 is ad hoc, that is flat 50% they can take as ITC, which means they don't have to calculate taxable by total, 50% they will take. Means what is the assumption? The assumption is that 50% will be taxable and 50% will be exempted, irrespective of what is the actual taxable and what is actual exempted. So that is option 2. But they need to decide between this option 1 and option 2 in the beginning of the financial year. So option 1's exercise that will be applicable throughout the financial year. Say for example, my interest income is 60%, taxable income is 40%. Then how much credit I can take? Interest income is 60%, taxable income is 40%. How much I can take proportionate ITC? 40%. Why? Because my taxable component is only 40%. Then suppose if I go for option 2, how much credit I can take? 50%. So which option is better? Option 2 is better. Then again, suppose if my interest income is only 30% and other income is 70%, how much I can take under proportionate ITC? 70%. But if I go for option 2, I can take only 50%. So which option is better? Option 1 is preferential. So therefore we need to decide based on this, but we need to decide it in the beginning of the financial year. Option 1's exercise cannot be withdrawn during remaining part of the financial year. Then if you go for option 2, 50% ITC only can be taken, remaining 50% will be lapsed. And that restriction of 50% is not applicable with respect to inward supply from another registration, means inward supply from a distinct person. For example, HDFC Bank Tamil Nadu receives inward supply from HDFC Bank Karnataka. In that case, should they reduce 50%? No, full ITC they can take. Only on that they can take full ITC. On all others, they will take only proportionate ITC, that is 50%. Okay. Suppose if we go for option 1, not only inward supply from distinct person, everything will be proportionate only. So what are the two differences between option 1 and option 2? Option 1, proportionate ITC. How to calculate proportionate ITC? Total ITC into taxable by total. Option 2, 50% of ITC, which means total ITC into 50%. Then second difference, inward supply from distinct person. Option 1, proportionate ITC. Inward supply from distinct person. Option 2, full ITC. Don't reduce 50%, full ITC you can take. That is this part. Now look into this question. This question we will answer as per both the options. Illustration 7, and that bank, financial institution, NBFC, interest on loans, advances, deposits is treated as exempted both for payment of GST as well as for ITC purpose. Axis Bank provides the following information for the month of November 2020. Eligible input tax on input 16,020, eligible input tax on input service 11,340. Value of taxable supply of services 11 lakhs, exempted supply of services 10 lakhs. Determine the amount of ITC available to Axis Bank. First we will take proportionate ITC option. So for that proportionate ITC option, please see this. Option 1, no need to make note, just listen. Option 1, so we have CGST, SGST. What is the gross liability? Gross. Please check the question. What is the taxable supplies? 11 lakhs. On that 11 lakhs, what is the rate of GST? 18%. So therefore, 11 lakhs into 18% means 1 lakh 98,000. Divide it into CGST, SGST. 99,000, 99,000. Then next, minus proportionate ITC. Proportionate ITC. What is the proportionate ITC that will be available? So total ITC how much? Total this two. 16,020 plus 11,340. 16,020 plus 11,340. How much? Huh? 26,000. 360, 27,360. In this, how much credit will be available? Proportionate to taxable. So what is proportionate to taxable? 11 divided by 21. Correct? How 11 divided by 21? Taxable divided by total turnover. So 11 divided by 21. So how much is that number? 27,360 into 11 divided by 21. 14,331 will be reduced. So remaining will be taken as the net liability. So 27,360 into 11 by 21, 14,331. 14,331 you reduce from 99,000. So remaining will be taken as net liability. This is under option 1. How much? 84,669 is taken. Understood proportionate option pa? Suppose if the same question we are doing under option 2, then what will happen? Option 2. Will the gross liability change? No. So CGST, SGST will be gross liability same. So gross liability is same. That is 99,000, 99,000. But ITC will change. So ITC, proportionate ITC. Proportionate ITC. What is that proportionate ITC? It will be 50% of the full ITC. What is the full ITC? So 27,360 into 50%. 13,680 will be reduced. So 27,360 into 50%, 13,680 will be reduced. So what will be taken as the net liability? 85,320 will be taken as net liability. So that is the answer. And now they can go for either 85,320 or 84,669. 84,669 is only less. So they need to decide that in the beginning of the financial year. So this is how you may get a question on banking company, financial institution, NBFC. Then 17 subsection 1 is proportionate ITC, partly business, partly non-business, we will get proportionate ITC. Then partly taxable, partly exempted, we will get proportionate ITC as per 17.2. 17.3 is the meaning of exempted supply. 17.4 special provision for bank, financial institution, NBFC. Now we are discussing a very, very important area, that is blocked credits. So blocked credits, so we need to remember, because in exam, we will have lot of inward supplies. Few are block credits, few are not block credits. Whenever it is block credit, ITC is not available. Okay. Now blocked credits are basically divided into 3: motor vehicle related block credit, construction related block credit, and other block credits. First, motor vehicle related block credits. Motor vehicles are divided into 3. Motor vehicles for transportation of persons, vessels and aircrafts, and others. Others are not at all block credit, which means ITC always available. What will come in others? Motor vehicle for transportation of persons means two-wheelers, cars, bus, etc. will come in motor vehicles for transportation of persons. Vessels and aircrafts also okay. What will come in others? Lorries, trucks, bulldozers, road rollers, cranes. These are all other motor vehicles, and even ambulance also. Why ambulance? Because ambulance is not a motor vehicle for transportation of persons. Ambulance is a motor vehicle which provide the first aid during the transportation. So the purpose is not for transporting persons. So it will come under other motor vehicles. So ITC is available. So other motor vehicles, ITC always available. Then when it comes to motor vehicle for transportation of persons, again that is divided into two. Capacity does not exceed 13, capacity exceeds 13. While counting capacity, including the driver's seat, we need to take. So now, if capacity exceeds 13, it is not a blocked credit. For example, so a company purchased a bus for transporting its employees, and the capacity of that bus is 40-seater. Now, can they take ITC with respect to that bus? So, bus will come under motor vehicle for transportation of persons, and the capacity exceeds 13. So, therefore, ITC is available with respect to that bus purchased. Now, what if the capacity does not exceed 13? It is a blocked credit. However, in 3 exceptional cases, ITC available. So, motor vehicle for transportation of persons, capacity does not exceed 13 is a blocked credit. However, in 3 exceptional cases, ITC available. What are those 3 exceptional cases? Further supply means I am purchasing and selling the motor vehicle. I can take ITC, that is further supply. Or I am using the motor vehicle for the business of transportation of passengers. Number 3, I am using motor vehicles for imparting driving skills. In these 3 cases, ITC is available even though capacity does not exceed 13. For example, a company purchased a car for transporting its employees, whether ITC available or not available. First, capacity, it is used for transportation of persons. Capacity does not exceed 13 and it is not for further supply, not in the business of transportation of passengers, not for imparting driving skills. Therefore, ITC not available. Like that. One more example, you need to answer this. A chartered accountant purchased a car for use in his profession. Can he take ITC with respect to the car purchased? Why? Capacity does not exceed 13. And is it covered under further supply used in the business of transportation of passengers imparting driving skills? No. Therefore, ITC not available. Then, a travel agency purchased a car for using it for transportation of passengers. So, can they take ITC with respect to that car? Why? So, even though capacity does not exceed 13, but it is used in the business of transportation of passengers, so ITC available. One more example. A person is into renting of motor vehicles. He purchased a car and he gave that car on renting and collected some rental income. So, whether he can take ITC on that car purchased? Why? Further supply. Further supply not only sale, but that includes even renting of motor vehicles also. So, therefore, supply means not only sale, barter, exchange, lease, license, everything will come under supply. So, therefore, renting of motor vehicles also coming under further supply. So, they can take ITC. Then, there is a car driving school. Car driving school purchased a car for teaching driving to the students. So, can they take ITC with respect to that? Yes. Even though car capacity does not exceed 13, but it is used in the driving skills, imparting driving skills. So, they can take ITC with respect to that. Then, one more example. A restaurant purchased two-wheeler for food delivery. A restaurant purchased two-wheeler for food delivery. Can they take ITC with respect to the two-wheeler purchased? Yes or no? So, why it is yes? No. Motor vehicle is not in further supply. They are selling two-wheeler. You order for food, they will give two-wheeler. Further supply means two-wheeler should be there in further supply. Okay. So, answer is yes. But why? Why? Because it will come under other motor vehicles because it is not used for transporting persons. Are they using it for transporting persons? Then what? Food delivery. So means it is not used for transporting persons. It is not vessels and aircrafts. So therefore it will come under other motor vehicles. So they can take ITC. Suppose if a person purchased a two-wheeler for using it in Rapido. Now can they take ITC with respect to that? First, two-wheelers used for transporting persons and capacity does not exceed 13 but covered under the exception used in the business of transportation of passengers, so they can take ITC with respect to that. So that is this. So motor vehicles which are vessels and aircraft. So we have completed other motor vehicles and for transporting persons. For vessels and aircrafts, generally vessels and aircrafts are blocked credits. However, we have 4 exceptions. In case of these 4 exceptions, ITC available. Number 1, used for further supply, used in the business of transportation of passengers, used for imparting driving skills. These 3 are same. But one more extra point is there, used for transportation of goods. So then in this 4 case ITC available, in other cases vessels and aircrafts ITC not available. For example, listen, Reliance Industries Limited purchased an aircraft for transporting its director, managing director from one place to another place. So now can they take ITC with respect to that aircraft purchased? No, because it is not in further supply, not used in the business of transportation of passengers, not imparting driving skills, not used for transportation of goods. So vessels and aircrafts will be blocked credit. Then another example, there is a car manufacturer. That car manufacturer purchased a ship for transporting the cars manufactured by them from one location to another location. Can they take ITC on that ship purchased? Yes. Which point? Used for transportation of goods. They can take ITC. Then first flight couriers or Blue Dart courier, they have purchased the aircraft for transporting the courier parcels. Can they take ITC with respect to that aircraft purchased? Yes. Where? Used for transportation of goods. Under that category they can take. Then Indigo Airlines purchased the aircraft for transporting the passengers. Can they take ITC with respect to that? Yes. Under used in the business of transportation of passengers. Then there is a company which is giving chartered flights on rental basis. So if you want a flight to go from one location to another location, so they will be giving a chartered flight on rental basis. For that they purchased a chartered flight. Can they take ITC with respect to that aircraft purchase? Yes. Why? Further supply. It is in the further supply, so they can take ITC with respect to that. Then a shipping maritime training institute. A shipping training institute purchased a ship for teaching the students how to operate the ship, what are the parts of the ship, etc. Can they take ITC with respect to that? Yes, because driving schools. Clear here? So now, tell me, motor vehicles divide into 3. What are they? Don't see the book. Motor vehicle for transportation of persons. Then vessels and aircrafts. Then others. Others, what is the treatment? Always ITC available. Then motor vehicle for transportation of persons divide into 2. Capacity does not exceed 13 and capacity exceeds 13. Capacity exceeds 13, what is the answer? ITC always available. Capacity does not exceed 13 is blocked credit. But we have 3 exceptions. What are those 3 exceptions? Further supply, used in the business of transportation of passengers, imparting driving skills. These 3 cases ITC available. Then next, vessels and aircrafts generally blocked credit. But we have 4 exceptions. What are they? Further supply, used in the business of transportation of passengers, imparting driving skills, and used for transportation of goods. That's it, pa. This is about motor vehicle related. Then in motor vehicles, one more point is also there, that is services in relation to motor vehicle. So we are receiving 4 services in relation to motor vehicle: repair and maintenance service, insurance service, and servicing, that is authorized service center service. So what is the difference between repair and maintenance and servicing? So repair and maintenance means we go to a workshop and we will give our vehicle for servicing. So private workshop, that is repair and maintenance. There are some authorized service centers. So like company operated service centers, there if you give, that is called as servicing. Then hiring, renting and leasing of motor vehicles. We are taking motor vehicle on hiring, renting and leasing basis. So rental basis. These 4 services, so with respect to motor vehicles, is eligible for ITC if motor vehicle is eligible for ITC. So you buy a motor vehicle, it is eligible for ITC. Then with respect to that motor vehicle, these 4 services also eligible for ITC. If you buy a motor vehicle and that motor vehicle is eligible for ITC, then these 4 services in relation to that motor vehicle is available or not available accordingly. So therefore, let's take an example again. A chartered accountant purchased a car, and on that car he took insurance. He paid insurance premium with GST. Can he take ITC with respect to that insurance premium? Why? As car purchased by the chartered accountant is not eligible for ITC, so with respect to that insurance premium, GST paid also not eligible for ITC. Understood, pa? Then a company purchased a car, and on that car they have received the servicing, authorized service center services. Now can they take ITC with respect to that authorized service center, and they are using that car for transporting their directors? Can they take ITC with respect to that servicing? No. Why? Car purchased is eligible for ITC? No. So as car purchased is not eligible for ITC, on that servicing also GST paid cannot be taken as ITC. Then a Ola driver purchased a car, and that car he gave it to a private workshop for repairs and maintenance. He paid along with repairs and maintenance some GST. Can he take ITC with respect to that? Yes, because the car purchased is eligible for ITC. On that repair and maintenance also ITC can be availed. Then suppose if I am purchasing an aircraft, so I cannot take ITC. Now I am taking renting of aircraft. Can I take ITC with respect to that? No, because if the aircraft purchased is not eligible for ITC, so renting of aircraft also not eligible for ITC. Suppose if a company takes a car on rent for transporting its employees, can they take ITC with respect to that rent-a-cab services? If they buy a car, are they eligible to take ITC? No. As they buy a car, they cannot take ITC. So when they take the car on rent also, they cannot take ITC. A company purchases a bus, they can take ITC. If they take the bus on rent, they can take ITC with respect to that renting. Yes. So 4 services. What are the 4 services? Repair and maintenance, insurance, servicing, hiring, renting and leasing of motor vehicles. First we need to check whether the motor vehicle purchased is eligible for ITC. Yes, then these 4 services also GST paid can be taken as ITC. If motor vehicle purchased is not eligible for ITC, then on these 4 services GST paid cannot be availed as ITC. That is this. Then second, construction related blocked credits. That is, we are making some purchases in relation to construction of an immovable property. What are they? Any service in relation to construction of immovable property, including works contract service, or any goods purchased in relation to construction of an immovable property is blocked credit. For example, for construction of immovable property, I purchased cement, bricks, iron rods, etc. Can I take ITC with respect to that? No, because goods purchased for construction of an immovable property is block credit, ITC not available. I receive construction contractor service, interior decorator service, architect service for construction of immovable property, even though it is business property. Can I take ITC with respect to that? No, because any service received for construction of an immovable property is blocked credit. I received a works contract service. So builder only buy all the material required and he is only doing the construction and he provided works contract service. On that works contract service also I cannot take ITC. So come on, what are the block credits in relation to construction? 3. Any service for construction of immovable property, including works contract service, or any goods purchased for construction of immovable property is block credits. However, we have 3 exceptions. In those 3 exceptional cases, ITC available. Exception number 1, this restriction is not applicable to no supplier. This restriction is only to the owner of the property. For example, you are the owner of the property. I am the builder. Okay, I am builder. Now, I received some services for construction of this property. Can I take ITC? Yes. So, the restriction is only to the owner of the property. For example, I buy the material. Can I take ITC? Yes. So, but if you buy the material, you cannot take ITC. If I buy the building material, I am the builder pa. If I buy the building material, I can take ITC? Yes. But you are the owner of the property. If you buy the building material, you cannot take ITC. So, therefore, the restriction is only to owner of the property, not to supplier. Read the first point. The above discussion is not applicable to supplier. That is, if a works contractor receives construction service for construction of an immobile property, then ITC available on construction service. Generally, construction service is block credit. But who is receiving it? Supplier, not the owner of the property. Understood? Then second exception. Suppose if the construction of immobile property is a plant and machinery. Example, in my building, I am constructing a lift. For construction of that lift, I received construction service or I purchase a material. Can I take ITC with respect to that? Yes. Because lift is what? Plant and machinery. Even though immobile, but ITC is available because the restriction is only to land and buildings, not for plant and machinery. And plant and machinery excludes what? Telecommunication towers and pipelines laid outside factory gate. Suppose for this telecommunication towers or pipelines laid outside the factory gate, if I receive any service for construction of that, ITC not available. Why? Because plant and machinery definition excludes telecommunication towers and pipelines laid outside factory. What if it is pipelines laid inside the factory gate? Whether it is treated as plant and machinery? Yes. Then GST paid on materials, can I take ITC? Yes. Then third exception. Suppose if the construction expenditure is charged to P&L, then also ITC available. Means if the construction expenditure I have capitalized, ITC not available. Sir, generally any service received and any goods purchased for construction of an immobile property is block credit. But what should I do if I want ITC? That expenditure I need to charge it to P&L. Then I can take ITC. What if I capitalize that expenditure? I cannot take ITC with respect to that. Then that is this three exceptions. Next, so in relation to construction, can you tell me first what are the block credits? Any service in relation to construction of immobile property, including works contract service. Then any goods for construction of an immobile property is block credit. Three exceptions. Not applicable to supplier of service. Then plant and machinery other than telecommunication towers or pipelines laid outside factory gate. Good. Third, charge it to P&L. In the absence of information in the question, so we will capitalize it. Only when it is specifically given as charge it to P&L, you need to take it as charge it to P&L. So these exceptions and all should be clearly given in the question. So if exceptions are not given in the question, which means exceptions are not there. So which means it is a block credit. Okay. Then other blocked credits. In this other blocked credits, first we have membership of a club, health and fitness center. So these are the block credits and these columns are exceptions. Okay. First, membership of a club, health and fitness center is a block credit. For example, lot of chartered accountants take membership of some social clubs like Rotary Club, Lions Club, etc. So mainly to increase their network, to increase their contacts. So because, today it is all about the network and the contacts that people are having. So depending upon that, so they will be able to get the business. Suppose if a chartered accountant know a rich person, definitely that rich person will have lot of businesses. So from that business, some tax work or audit work they will be getting. So that's the reason why. So they take membership of a club. Is it business expenditure? Yes, business expenditure only. But they cannot take ITC with respect to that. Why? Because it's a blocked credit. Membership of a club, health and fitness center. Then celebrities, lot of celebrities, hero, heroine or actors, so even TV, serial actors, etc. they will be taking membership of fitness center. They will go to gym on a regular basis. So in order to maintain the health and the fitness. So this gym membership is actually for their profession. So but can they take ITC with respect to that? No, because membership of a club, health and fitness center is blocked credit. ITC not available. But if it is under a statutory obligation taken by employer for their employees, they can take ITC. Got it? For example, there is a social club and a recreational club, and government of Tamil Nadu mandated the employer to take membership of that recreational club for their workers or employees. Now can they take ITC with respect to that membership of a club? Yes, they can take ITC. Only one exception pa. Membership of a club, health and fitness center is block credit. Only in one case they can take ITC. Suppose if it is provided by employer to employee under statutory obligation. Then number 2, travel benefits extended to employees on vacation. So an employee is going on a vacation and that travel expenditure is incurred by the employer. Can they take ITC with respect to that? No, it's a blocked credit. For example, say the employer sponsored the honeymoon package of an employee. Employee got married and employee is very good employee, hard working, etc. and all. So therefore employer sponsored the honeymoon package of the employee. Means employee will go with his wife only. Employee's wife only. Okay. So for that employer has sponsored the money. Okay. Travel benefit. Now can the employer take ITC with respect to that? It's a business expenditure because it is for employee they are incurring, employee welfare. So can they take ITC with respect to that? No, because the employee is going on a vacation. Suppose if the employee is going on a business visit and for that if the travel expenditure is paid by the employer, can the employer take ITC with respect to that? Yes. So only in case of vacation, travel benefits extended to employees on vacation, ITC not available. However, we have an exception, only one exception here also. Suppose if it is incurred by employer to employee under a statutory obligation, then ITC available. For example, Tamil Nadu government has mandated all software and BPO companies to mandatorily provide cab facility to their employees if they are working in the night shifts. So now this particular cab facility, generally rent a cab is blocked credit, correct? If a company purchases a car for transporting its employees, blocked credit. And instead of transporting the employees, if they take it on rental basis, so then also if they buy a car, block credit. So renting of car also block credit. If it is under a statutory obligation, then ITC available. So therefore like that, suppose if a government is mandating an employer to give a leave to the employee, leave travel concession, they have to provide the leave travel concession to the employee. For that leave travel concession, as per the mandate of the government, if the employer provides the travel benefits, then they can take ITC. Understood? So travel benefits extended to employees on vacation. So under a statutory obligation, they can take ITC. Same way, hiring, renting and leasing of motor vehicles also, that point is there. Hiring, renting and leasing of motor vehicles also, employer under a statutory obligation, they can take ITC. Okay. Then next, look into NRTP, non-resident taxable person. NRTP is a person who come from outside the country to India and is not having any physical place of business in India. He is known as a non-resident taxable person. Example, cricketers, so who come from outside India to India to play one-day international or IPL matches will be called as non-resident taxable person. They come from outside India to India and is not having any physical place of business in India. They are called as NRTP. Same way, actors who come from outside India to India to act in movies will also come under NRTP. Then some sellers of goods who come from outside India to India to sell their goods in India is also called as NRTP. Generally, NRTP cannot take ITC with respect to any inward supplies. And are they required to register in India? Yes. An NRTP is required to get registered in India, but they cannot take ITC on inward supplies. Only one inward supply they can take ITC. What is that? Import of goods. For example, these cricketers, usually they will be having, sentiment with respect to bat, cricket bat. So they will be using their cricket bat, which they are using it for practice only. So that cricket bat is imported. So now in this case, as the cricketer is an NRTP, they are importing the cricket bat. On the cricket bat, whatever GST is paid, can they take ITC? Yes. So only on import of goods they can take ITC. With respect to all other inward supplies, they cannot take ITC. That is with respect to NRTP. So we have covered 3 points. What are they? First, membership of a club, health and fitness center is block credit. Exception, statutory obligation, employer to employee. Number 2, travel benefits extended to employees on vacation, blocked credit. Exception, statutory obligation, employer to employee. Then NRTP, blocked, all are a block credit. Exception, import of goods. Then look into the next one, food and beverages, outdoor catering, so related to food. Then beauty treatment, cosmetic surgery, plastic surgery, hair transplantation, related to beauty. Then life insurance, health insurance, related to insurance, related to food, related to beauty, related to insurance. So food and beverages, outdoor catering, beauty treatment, and then health insurance and life insurance. These inward supplies are blocked credits. However, we have 3 exceptions. In these 3 exceptional cases, ITC available. What is the first exception? Statutory obligation. For example, say outdoor catering service is received by an employer to provide food to the employee. Generally, it is blocked credit. What if, as per Factories Act, there is a mandatory requirement that employer has to provide food to the workers, for that the employer purchase the food? Can they take ITC with respect to that? Yes. You understood? Generally, food and beverages is block credit. But if it is incurred by employer to employee under a statutory obligation, then they can take ITC. Then, second exception, if inward supply and outward supply in this same category, for example, I am into the business of outdoor catering. Now, I received outdoor catering service from another person. For example, there is a marriage function. For that marriage function, I need to cook food for 1,000 people. So definitely, single person cannot do. So I will outsource some dishes to another outdoor caterer. Now my inward supply also outdoor catering, my outward supply also outdoor catering. I can take ITC with respect to that. Or I purchase some food items for sale of food items. I can take ITC. That is the meaning of inward supply, outward supply in the same category. Then third exception is, inward supply is part or component of the composite or mixed outward supply. For example, I am into the business of transportation of passengers by airways. Now, to my passengers, I provide the food along with the travel. So, I receive the outdoor catering service. Can I take ITC? Yes, because inward supply is part of the outward supply. Correct? I receive food, that food is in my inward supply, and in my outward supply also that is a part. So therefore I can take ITC with respect to that. Understood? Now, an airline company receives beauty treatment services for their air hostess. Can they take ITC with respect to that beauty treatment expenditure? Yes or no? Okay, if it is yes, why it is yes? An airlines receives beauty treatment service with respect to the air hostess business expenditure only. Now, can they take ITC? Generally, beauty treatment is block credit. Can they take ITC? Statutory obligation, which statutory obligation? Yeah. So there is no statutory obligation. No law says that, so air hostess should look good and because of that the airline should spend the money. No. Okay. Inward supply, outward supply in the same category. No. Inward supply part of outward supply. Yes, sir. We will not pay for air hostess. You. We are paying only for travel, not for the air hostess. Air hostess is not in outward supply. Oh, இந்த மாதிரி ஒரு நினைப்புல வேற இருக்கீங்களா? So we are not paying for the air hostess spa. We pay for the travel only. So inward supply is not part of outward supply. So therefore on the beauty treatment expenditure ITC is not available. So that is this. Okay. So therefore tell me what is this inward supply? Food and beverages, outdoor catering, beauty treatment including cosmetic, plastic, hair transplantation, life insurance and health insurance service is block credit. Suppose if it is under a statutory obligation by employer to employee, ITC available. Inward supply, outward supply, same category, ITC available. Inward supply part of composite or mixed outward supply, then also ITC available. Then, same way, hiring, renting and leasing of motor vehicles. Generally, hiring, renting and leasing of motor vehicle is block credit, correct? Say this. Hiring, renting and leasing of motor vehicle is block credit if motor vehicle is not eligible for ITC. But for that, we have three exceptions. What is that? Statutory obligation. That's what I told you, cap facility, mandatorily to be provided to workers, employees, BPO employees. So, ITC available. Inward supply, outward supply, same category. I am into business of renting, I take the motor vehicle on rent. I can take ITC. So, because my inward supply also renting of motor vehicles, outward supply also renting of motor vehicles. Then, inward supply part or composite, part or component of the composite or mixed outward supply. So concentrate. Generally, some wildlife sanctuaries and tiger reserves, what they do is that they will allow you to enter into that wildlife sanctuary or tiger reserve along with a vehicle provided by them. So you cannot go by walk and all. You will go, but outside you will not come. Okay. So they will provide one vehicle, one jeep, and in that jeep only you need to travel because the animals over there are accustomed to this jeep that okay, if this jeep is coming means there will be one security in this jeep, he will be having a gun, so therefore the animals and all will not be coming nearing to that jeep. So normal vehicle when you take, the animals will start coming and attacking that vehicle. That's why these tiger reserves, national parks and wildlife sanctuaries, they will be providing the jeep also along with the entry ticket. So there are two supplies, entry to the park or entry to the wildlife sanctuary and hiring of jeep. These two are actually mixed supply. Why? Entry to the park or wildlife sanctuary is exempted irrespective of the ticket price, that entry ticket is exempted. Hiring of jeep is taxable. So one taxable, one exempted will be mixed supply. Now this jeep, they will take it on rental basis. Who? That wildlife sanctuary. So therefore, wildlife sanctuary, inward supply is hiring of motor vehicle, which is part or component of the outward supply, which is mixed outward supply. So therefore, they can take ITC with respect to that. That is the meaning of this. Then, next one. I am purchasing from a person opting for composition scheme. Can I take ITC? No. Because purchases from a person opting for composition scheme is a blocked credit. I cannot take ITC. Then inward supply used for personal consumption. Can I take ITC? No. Because we saw it in section 16 itself. Inward supply should be used or intended to be used in the course or furtherance of business. Then I purchase some goods which are lost, stolen, destroyed or written off or disposed of by way of gift or free sample. Even then, ITC not available. For example, I purchased some goods. Someone has stolen those goods or those goods got destroyed. I cannot take ITC with respect to that. I purchased some goods. I am giving it as gifts or free samples. Even then, I cannot take ITC with respect to that. However, in case of gifts and free samples, we have studied some exceptions. What is that? If gifts and free samples become supply, then we can take ITC with respect to that goods purchased. Okay. So these are the blocked credits that we have. With this, we completed all the blocked credits. Then, looking into the last section in input tax credit, that is section 18. Input tax credit in special cases. So this section 18 we will discuss little later, because too much information is there in your mind. So that's the reason why little bit gap I am giving. We will see some MCQs and then we will come back to this. Okay, some question and answers we will do and then come back to this. See this. Take your practice manual. I have not discussed section 18 yet, and that we will see later. What's the page number, pa? $90. Page number 97. See the MCQ 1. Input tax credit is not available in respect of services on which tax has been paid under composition levy. Block the credit. ITC available or not available? Okay, ITC not available. Free samples. Goods purchased and distributed as free sample, and nowhere it is given that it is supplied. ITC not available. Goods purchased and used for personal consumption, not available. So all these three, ITC not available. Then see the second one. In which of the following situations recipient need to add the input tax credit availed by him to his output tax liability? If the payment for supplies under forward charge is not made to supplier within 180 days. So 45 days is wrong, 90 days is wrong. It should be 180 days from the date of invoice. Even 1 year also wrong. Then if goods are received in lots or installment, so only on receipt of last lot. 50% ITC on first installment balance, no. ITC can be availed upon receipt of last installment. 100% ITC on first installment, no. Proportionate ITC also, no. For banking company using inputs and input services, partly for taxable and partly for exempted, which of the statement is true? So partly for taxable, partly for exempted, banking company. ITC shall be compulsorily restricted to credit attributable to taxable supply including zero rated, not restricted. They can take ITC. So this statement is wrong. 50% eligible ITC on inputs, capital goods and input service shall be mandatorily taken in a month and rest shall lapse. Yes, 50%. They can go for 50% option, but banking company can choose to exercise either option A or B. Correct. So actually they can take proportionate ITC or 50% ITC. So as per the option. So therefore option C is the correct answer. ITC shall be compulsorily restricted to credit attributable to taxable supply excluding zero rated supplies, no. So therefore option C, they can either choose between option A or option B. Then question number 5, a supplier takes deduction of depreciation on GST component. Sir, he is computing depreciation on GST component. So now can supplier take ITC or not? So they cannot take ITC. So not avail ITC on the said tax component. Then ITC of motor vehicle used for making dash is allowed. Transportation of goods available or not available? Transportation of goods. Other motor vehicles pa. Transportation of goods is other motor vehicles. Motor vehicles divide into 3 for transportation of persons, vessels and aircrafts, and other motor vehicles. Other motor vehicles we can take ITC na. So transportation of goods means other motor vehicles, we can take ITC. Then taxable supplies of transportation of passengers. Motor vehicles used for transportation of passengers, can we take ITC? Yes. Then taxable supplies of imparting training on driving, can we take ITC with respect to that? Yes, driving skills. So all three are exceptions, so they can take ITC. Then Mr. A, see this 7th one, Mr. A has a tax invoice dated 21/2023 of services received by him. Its input tax credit is lost if ITC is not availed on or before dash if they are filing annual return by 25 December 2023. 30th November 2023. What is the time limit for availment of ITC? So 30th November 2023, because invoice dated 21/2023 means financial year 2022-23. For 2022-23, it is 30th November 2023 or date of filing annual return, that is 25 December 2023, whichever is earlier, that is 30 November 2023. Then input tax credit shall not be available. Goods used for personal consumption, available or not available? Okay. Then membership of a club provided by employer to employee as per company's internal policy. What if it is under a statutory obligation? Available. Because membership of a club, health and fitness center is blocked credit. But we have an exception. If it is incurred by employer to employee under a statutory obligation, ITC available. Then travel benefits extended to employees on vacation, such as leave or home travel concession, again as per company's internal policy, not available. So all these three cases, ITC not available. Suppose if travel benefit extended to employee under a statutory obligation, ITC available. Then next, Mr. Raghu avails service of Mr. Raja, a chartered accountant, as under audit of financial accounts 55,000. So audit of financial accounts anywhere in the blocked credits? No. And is it used in the course or furtherance of business? Yes. So they can take ITC with respect to this 55,000. Then tax audit and annual filing 10,000. Anywhere in the block credits? Used in the course or furtherance of business? Yes. So therefore they can take ITC. Income tax return filing of Mr. Raghu's wife 5,000. Anywhere in the block credit? No. Okay. Personal consumption. Correct? Personal consumption. Because it is not for Mr. Raghu but for Raghu's wife. Means it's a personal expenditure. On that they cannot take ITC. So 55,000 plus 10,000. On that GST is 18%. So 55 and 10,000, on that 18%, how much? 11,700. The accountant of Mr. Raghu has booked the entire expense of 70,000 plus GST. Even though they book the expenses, but this is not for business, correct? Personal purpose, that's why ITC not available. Then next, what is input tax? What is input tax? Already we discussed. Tax paid under CGST, SGST, IGST under FCM, includes tax payable under RCM. It also includes IGST paid on import of goods, but it excludes tax paid under composition scheme directly. We discussed the definition. What are the conditions necessary for availing ITC? 8 conditions. Only a registered person can avail ITC. The inward supply should be used or intended to be used in the course or furtherance of business. The person availing ITC should be in possession of tax paid document. They should have actually received the goods or services. Those conditions, okay. Then, can a person take ITC without payment of consideration for the supply along with tax? Yes, they can take ITC. However, they should make payment to supplier within 180 days from the date of invoice. Then, but this is not applicable in case of RCM, supply without consideration and payment made to some other person on behalf of supplier. What is the time limit for taking ITC and reasons therefore? So it is 30th November of the succeeding financial year. So change this answer pa. It's not due date of filing return for the month of September. It is November end of succeeding financial year. 30th November of succeeding financial year or date of filing of annual return, whichever is earlier. 30th November of succeeding financial year or date of filing annual return, whichever is earlier. Then, this question number 5 is related to section 18 that we will see later. Question number 6. Swastik Private Limited is a manufacturer of taxable goods. It purchased a machinery for 8 lakhs on which IGST of 14,400 is paid. The company has claimed depreciation under Income Tax Act 1961 on full value of the machine, including the IGST component, has also availed ITC of 14,400. So depreciation is computed on what? Full value including IGST. So can they take ITC of 14,400? No. As per section 16 subsection 3, so if they claim the depreciation on ITC GST component, they cannot take ITC. Then question number 7, Sigma Consultants, an LLP of finance professionals, provides financial consultancy services. It made an advance payment of 1,18,000 inclusive of GST 18% in the month of October to Azuro Computer Services for developing a software. The software would be used by the LLP to enhance the precision of the financial advice given by it to various clients. The balance payment is to be made after successful test run of the software in the month of December. Sigma Consultants has availed ITC of 18,000 in the month of October. Do you think Sigma Consultants can avail such ITC? Examine the scenario with reference to relevant legal provisions. Can they take ITC in the month of October? They paid 1,18,000. Yes or no? They can take ITC in the month of October on 18,000 rupees. They paid that money advance. They can take ITC or not? Yes or no? Answer is no. Reason you tell me, pa. As per section 16, conditions for availment of ITC, we can avail ITC only on receipt of goods or services. When are they receiving services? Read the question properly. When are they receiving services? December. When they can take ITC? Only in the month of December. Even though they made the payment in October, even though invoice may also be in October, but only when they have actually received goods or service they can take ITC. They are actually receiving the goods or service in December, so ITC can be availed in December. However, it cannot avail ITC in the month of October. Then, question number 8. A taxable person is in the business of information technology. He buys a car, maximum seating capacity 5, for use of his executive directors. So, can they take ITC? Motor vehicles for transportation of persons. Capacity does not exceed 13 and not covered under exceptions. So, they cannot take ITC with respect to that car purchased. Then, question number 9. A technical testing agency tests and certifies each batch of machine tools before dispatch by BMT Limited. Some of these tools are dispatched to a unit in SEZ without payment of GST. In case of supplies to SEZ and exports, it is called as zero rated supplies. In case of zero rated supplies, there are two options: pay IGST or don't pay IGST. So they are going for second option, without payment of GST. The finance personnel of BMT Limited wanted to know whether they need to carry out reversal of ITC on the testing agency service to the extent attributable to SEZ supplies. And for your information, these supplies are not taxable. These supplies are not taxable, means exempted. Okay. Now, can they take ITC with respect to the testing agency service? Sir, outward supply is exempted, sir. Can they take ITC? Yes, I discussed that point. Even though the product is exempted, but the moment it is supplied to SEZ or it is exported, it will become zero rated. When it becomes zero rated, they can take ITC on inward supplies. Little bit you think and answer in exam. So don't blindly, okay, you read one point and immediately don't jump to the conclusion. Read it, because so this point somewhere we would have studied, but only thing we will not be able to recollect immediately in the exam hall. So think twice or thrice, is my answer correct? And we have some other points also related to this. Even though the product is not taxable, but the moment it is supplied to SEZ, it will become zero rated, and we studied zero rated supplies we can take ITC. So therefore ITC available or not available in this case? Yes. full ITC is allowed on inward supplies of BMT used for effecting supplies to SCZ. Then question number 10 we will see later, that is related to 18, and this 11 also related to 18, 12 also, then 13 you see, question number 13. Harshgeet Private Limited, a registered supplier, is engaged in manufacture of taxable goods. The company provides the following information pertaining to purchases made or services availed by it during the month of July. Raw material to be received in the month of September. Sir, first we are required to compute the ITC for which month? But when the raw material is received, so can they take ITC in July? So they cannot take ITC in July because ITC can be availed only when the goods and services are actually received. Okay. Membership of a club availed for employees working in the factory. Anywhere it is given that it is a statutory obligation, which means ITC not available. Membership of a club, health and fitness center is blocked credit and it is not under a statutory obligation, so ITC not available. Inputs to be received in 5 lots, out of which third lot is received in the month. Not available because ITC can be availed only on receipt of last lot. So therefore we cannot take ITC in this month. Trucks used for transportation of raw material. Yes, because trucks will come under other motor vehicles. Other motor vehicles ITC is available. Then capital goods, out of 3 items, invoice for 2 items is missing and GST paid on those 2 items is 80,000. So can we take ITC on 80,000? Why? Invoice is missing. When invoice is missing, we cannot take ITC on 80,000. So we can take ITC only on 70,000. We can take ITC only with respect to 70,000. Determine the amount of ITC available with Harshgeet Private Limited for the month of July by giving necessary explanation for treatment of various items. So therefore we need to take only 40,000 and 70,000, that is 1,10,000. Then one more question, say this. So Jamku Limited, a registered person, is engaged in the business of spices. It provides the following details in relation to GST paid on inward supplies procured by it during the month of October. Raw spices purchased, raw spices sold to customers, raw spices used for personal use of directors. First, they are purchasing some goods for sales to customers. Can they take ITC? Anywhere in the blocked credit and used in the course or furtherance of business? So they can take ITC with respect to 50. What about 20? No. Why they cannot take ITC? Personal consumption. If any goods are purchased and used for personal consumption, ITC not available. Then electric machinery purchased for being used in the manufacturing process. Anywhere in the block credit, electric machinery anywhere in the block credit? No. And is this used in the course or furtherance of business? Yes. So ITC available. Motor vehicle used for transportation of the employee. So they have not given capacity. They have not given capacity. So then we will take capacity does not exceed 13. So therefore it is a blocked credit and it is not covered under exception. So therefore ITC not available. Then payment made to contractor for construction of staff quarter. Payment made to contractor for construction of staff quarter. So nothing is given means they would have capitalized the charge to P&L. Capitalized. So therefore construction expenditure capitalized, which means blocked credit. They cannot take ITC with respect to that. So only 50,000 and 25,000, 75,000 they can take ITC. Okay. And remember one important point, motor vehicle has been defined as any motor vehicle used in roadways, okay, whether it may be electrical or it may be mechanical, okay, anyway it may be. But motor vehicles do not include any motor vehicle which is used in the fixed premises, within the premises. Like within factory, they use a forklift truck. So that is not a motor vehicle. And within airport, they use a small vehicle to carry the, old people, etc. to the gate. So handicapped people, etc. That is also not a motor vehicle because which is used within a fixed premises. Even motor vehicles excludes any motor vehicle which is less than or equals to 25 cc. Less than or equals to 25 cc will not be considered as motor vehicle. Usually, any motor vehicle you take two-wheelers and all, it will be 100 cc pa. Less than or equals to 25 cc means like just a motor is there, okay, just motor is there. So we cannot call it as actually, a motor vehicle. So maybe a cycle with a small motor fixed to it, so could be called as a, 25 cc, etc. So in case of the 25 cc motor vehicles, can we take ITC? Yes. Why? Because it is not a motor vehicle. Motor vehicle excludes what? Motor vehicle with less than or equals to 25 cc. Means it is first of all not a blocked credit. Not a blocked credit means ITC available. Don't worry, this point already tested. So in the last attempt it has been tested. So the 25 cc, but maybe in MCQ again this may be asked. So motor vehicle, somewhere you write down pa. Motor vehicle less than or equals to 25 cc is not a motor vehicle which is blocked credit. Motor vehicle less than or equals to 25 cc, motor vehicle less than or equals to 25 cc is not a motor vehicle for blocked credit. Is not a motor vehicle for blocked credit. Is not a motor vehicle for blocked credit. Therefore, ITC available. Okay. Fine here. So we'll take a break and thereafter we will complete section 18 and we will be looking into the illustrations, remaining illustrations.